Good evening, members. This is CA Piyush Chandak, currently Treasurer WIRC, signing in from BKC WIRC office. I welcome all of you to the refresher course being conducted from last many days. And today's faculty is one of the expert, I believe, because I was just going through his introduction. And I think if I just read the degrees, you will understand about his depth of knowledge. Dr. Alok Garg, his name contains doctor, that means he has done doctorate PhD. His educational qualifications are CA, CS, Diploma in IFRS, UK, and certificate in Ind AS, ICAI, certificate in BRSR, ICAI, and BCom Honors. He has authored 4 books on accounting standards so far, and those includes treatise on Ind AS explained with the practical examples and MCQs. He has also co-authored a comprehensive book on leases, treatise on leases, co-authored a comprehensive book on Ind AS and insights into Indian accounting standards published by Walters and Clover. He also developed a material on Ind AS and IFRS for CA final under new scheme of ICAI. He has reviewed material on Bhutanese accounting standards drafted for Bhutan on behalf of ICAI. He has authored numerous articles on IFRS and Ind AS in the newsletters and magazines of ICAI. And I think this brief introduction is much more to let you know that the faculty we are getting here is a very knowledgeable faculty, and I expect his lecture will definitely give you more insights and practical knowledge on in the field of Indian Ind AS. And with this, I request C. Alok Garg to take over the charge of the seminar. Thank you. Thank you very much, sir.
Thank you, Piyush, for the nice introduction, and good evening, participants. And thank you, WIRC for WIRC of ICAI for giving me this opportunity. And just let me know if my screen is visible, whether my presentation is visible.
Not yet, sir.
नहीं सर, अभी तक आप शेयर नहीं हुआ सर.
अच्छा, अभी बताइएगा if it is visible now.
हो गया सर.
Yeah. So participants, I believe today is the fourth day of this certificate course on Ind AS, and the first 3 faculties have briefed about Ind AS 1, which is presentation of financial statement, Ind AS 8, accounting policies, changes in accounting estimates and correction of errors, Ind AS 10, events occurring after balance sheet date, Ind AS 12, income taxes, Ind AS 37, provisions, contingent liability and contingent assets. And in the last class, you have gone through with the 3 asset-based standard, which is property, plant and equipment, Ind AS 16, intangible asset, Ind AS 38, and investment property, which is Ind AS 40. Right. So I believe these are the 8 standards which you guys have discussed in the last 3 sessions. If I talk about tomorrow's agenda on the menu card, so today we are going to, so not tomorrow, today's agenda on the menu card. So today we are going to discuss 3 standards: Ind AS 19, which is on employee benefits, Ind AS 24, which is related party disclosures, and Ind AS 108, which is on segment reporting. The classic feature of today's agenda is these 3 standards are more or less disclosure based standard, right? So just to accounting standard, which is applicable for non-corporate entities and which is applicable for corporate entities, I mean to say companies on which Ind AS is not applicable. And the companies like listed companies on which Ind AS is applicable, of course, for employee benefits, Ind AS 19 is the standard which you need to discuss, which you need to understand, right? So guys, coming to the standard employee benefits. Now, just looking at the title of the standard, what do you expect from this standard? Employee benefits. So if I say that this is an active voice, and if I read the passive voice of this standard, employee benefits means benefits which is provided to the employee, right? And the expectation from this standard is, this standard talks about how to do the accounting, how to do the measurement, how to do the recognition, how to do the presentation, how to do the disclosures about benefits which are given to the employees. So this standard talks about the entire accounting guidance for the benefits which are given to the employees, right? If we talk about benefits which is given to the employee, what could be the kind of benefits which is given to the employee? Yeah. So this standard is something which is close to everyone's heart. The person who are into industry, who are working, so they got the salary, and the and the chartered accountant who are into practice, so they are giving salary to the staff, right? So what could be the employee benefits? The employee benefits could be salary, could be wages, could be house rent allowance, could be conveyance allowance, could be medical facilities, could be gratuity, could be provident fund, could be bonus, right? Paternity leave, maternity leave. So these kind of benefits are known as the employee benefits. So whatever benefits given to employee is known as the employee benefits, right? So if I talk about 10 years before or 15 years back, the name of the standard was accounting for retirement benefits, but now it is no more a retirement benefits. It is a employee benefits. And when I say employee benefits, this standard talks about the benefits given to the employee during the employment and after the employment. So employee benefits covers the benefits given to the employee during the course of the employment, as well as benefits which are payable after employment. For example, gratuity. For example, family pension. For example, post retirement medical facilities, right? So this standard covers the entire era of employee benefits which is given to the employee, right? So let's talk about the history of the standard. Globally, there is International Accounting Standard 19, which was issued in 1983, and the name was Accounting for Retirement Benefits, as I told you. In 1993, globally, the standard was revised, and the name was again Retirement Benefit Costs. Okay. In 1998, the name was changed from retirement benefit to employee benefits. It means till this point of time, the standard was only talking about the retirement benefits, but since 1998, the standard talks about the benefits which is given during the employment as well as after the employment. And this standard were also revised in 2011. Some clarification were added, right? But largely the name was employee benefits only. If I talk about Ind AS, of course, Ind AS are notified on 16 February 2015, and the standard is Ind AS 19. If I talk about accounting standard, in AS there is AS 15, and in AS 15 there is a standard which was issued in 1995, and the name was Retirement Benefits, the same name, because we have taken this standard from the global standard, right? So the name was Accounting for Retirement Benefit in the Financial Statement of Employers. And in 2005, this accounting standard got revised, and the name is Employee Benefits, right? So largely accounting standard 15 is similar to Ind AS 19. Largely, I'm not saying it is copy paste, largely, right? So just one confirmation, I hope my voice is clear, my voice is audible to everyone, and my screen is also visible properly. Okay, great. So why this standard? This standard is applicable, this standard is important in every organization. Why? Because organization cannot run without employees, and if there are employees, there are employee benefits, and if there are employee benefits, there is a applicability and requirement of Ind AS 19. So every company has employees who got some benefits, right? And a portion of gains or losses hits other comprehensive income and not profit or loss account. We'll discuss. While reading or while discussing Ind AS 1, you must have gone through with the concept of other comprehensive income in Ind AS 1, right? In the statement of profit and loss. So we will discuss that a portion of employee benefit will go to the other comprehensive income. And what is the portion? We will discuss that. What is the objective of this standard? The objective of the standard is to prescribe the accounting and disclosure for employee benefits. This standard requires an entity to recognize a liability when an employee has provided service in exchange for employee benefits to be paid in the future. What does it mean? So today, I am serving my organization, right? Today, for example, I am in my current organization since last 6-7 years, okay? And when I will retire from my organization will pay me a gratuity, right? So this is something which has to be paid in future, okay? So don't you think that whenever I'm serving my period with the organization has to create a liability to create karni padegi na organization ko, right? So this standard says that whenever the employee is providing a service in exchange for employee benefit to be paid in future, the organization has to create a liability, and the classic example is gratuity, okay? And an expense when the entity consumes the economic benefit arising from the service provided by an employee in exchange for employee benefits. For example, I'm serving my organization and organization is paying me a salary. What is the accounting entry? Salary expense account debit to salary payable account, salary payable account debit to bank account. Organization will pay me a gratuity when I'll retire. So today, my organization is creating a provision for gratuity. What is the accounting entry? Gratuity expense account debit to provision for gratuity liability account, right? So this standard says that this standard talks about the accounting and disclosure for employee benefits, and this standard says that the organization has to create a liability as well as expense when the employee is providing the services in exchange for some benefits, right? So friends, few of the chartered accountants think that, and not few, even everyone thought that कि इस स्टैंडर्ड में हमें कुछ नहीं करना है, इस स्टैंडर्ड में जो करना है एक्चुअली को करना है, right? So nothing to read in this standard, nothing to discuss in this standard, nothing to understand in this standard. But I can tell you one thing, after reading this standard and after 45 minutes, I can guarantee you, if you're not able to understand actuarial report, you will be able to understand the actuarial report, right? You will be able to understand the assumptions. You will be able to understand what is the accounting for employee benefits. I can guarantee you will be able to audit the actuarial reports, right? Okay, so let's go ahead. Coming to the scope part, this standard is applicable to every kind of employee benefit except share-based payment. You must have seen that today's there are a lot of startups, and when you join startup, so a 10-year guy or 15-year guy is joining a startup at a salary of 1 crore. Will that salary actually 1 crore? Answer is no. They are paying, let's say, 50 lakh bucks, and they are paying ESOP worth rupees 50 lakhs, right? So apart from employee share-based plan, apart from employee stock option plan, whatever they are paying, that is a salary, that is an employee benefit which is covered under Ind AS 19. But regarding the share-based payment, that another 50 lakh will be covered under Ind AS 102, not Ind AS 19. So this standard covers all the employee benefits except Ind AS 102 share-based payment, except share-based payment which is covered under Ind AS 102. This standard does not deal with reporting by employee benefit plan. You guys are working in a company or you guys are auditing a company where the company has a gratuity fund, right? And I can tell you HDFC, LIC, these organizations are creating a gratuity corpus for other entities, right? So these are the provider of employee benefit plans. So this standard is not applicable to provider of employee benefit plan, like in this case HDFC or LIC. This standard is applicable to the companies who have the employees and where they are paying the employee benefits, right? So it is not applicable to the provider of employee benefit plan. It is applicable to the companies who have the employees, right? Definition of employee. Who could be the employee? So Ind AS 19 is silent about who could be the employee, but Ind AS 19 says that employee may provide service to an organization or to an employer either on a full-time basis, part-time basis, permanent basis, casual basis, or temporary basis. If there is a temporary staff, if there is a casual staff, there is a part-time staff, still this Ind AS 19 will be applicable. And employees also include directors and other management personnel. In accounting standard 15, it was including managing director, but in Ind AS 19, the scope is wide, the coverage is wide, and employee also include directors and other management personnel. What could be the benefits which are payable during and after the employment? I don't know whether there is a chat options in this platform or not, because I cannot see any chat box. So participants, if anyone can tell me what are the benefits payable during and after the employment. What could be the benefits payable during the employment and after the employment? So benefits which are payable during the employment: salary, yeah, special allowance, house rent allowance, leave benefits, maternity leave, paternity leave, allowances, perquisites, okay. And what could be the benefits which are payable after employment? Gratuity, post-retirement benefits, right? Medical facilities, post-retirement medical facilities, family pension. So these are the post-retirement benefits, okay. So after employment benefits, so wages, salaries, bonus, sick leave, maternity leave, paternity leave, provident fund contribution, gratuity, perquisites, long-term bonuses, long service awards, loyalty awards, VRS, pension, etc. These are the kind of benefits which are payable during and after employment. Like, right, like my organization has a policy that if every employee who will complete 5 years will get 20,000 rupees, every employee who will complete 10 years, he will get 50,000 rupees as a long service awards, right? So long term bonuses, okay, like my organization has a LT policy, okay, long term incentive plan, right? So what are these kind of plans? These kind of benefits are covered under Ind AS 19, which is benefits which are payable during or after employment, right? Now what could be the employee benefits? So employee benefits, as I told you, these are all form of consideration which is given by an entity either in cash or in kind. When it is in kind, it is called as a perquisites, right? By an entity in exchange for service rendered by employees or for the termination of employment. So guys, the definition of employee benefits cover all form of consideration, be in cash, be in kind, given by an entity in exchange for service rendered by the employees or for the termination of employment. Even though if the employer is terminating the employment of the employee and employer says that we will pay you 6 months salary, so that is also a form of employee benefits. That is also a form of a consideration which is covered under employee benefits, right? If the employee will, if the employer will say that, or that I want to have a VRS, for example, in case of a navy, in case of a government company, you must have heard that just 2 years back there was a news in the newspaper that BSNL employees wants to have a VRS, right? So if an employee wants to have a voluntary retirement, in that case it is again a kind of a termination benefit, and it is again covered under employee benefits, right? So employee benefits covers all form of consideration which is given to an employee, right? What are the type of employee benefits? Short term employee benefits, post employment benefits, other long term employee benefits, and termination benefits. So there are four kind of employee benefits. Short term employee benefits, what could be the example of short term employee benefits? Salary, wages, bonus. So whatever amount which is payable within 12 months is known as a short-term employee benefits. What is meant by post-employment benefits? So whatever amount which is payable after employment, either due to retirement or due to death, right? After employment, not post-retirement, okay? Post-employment. So post-employment includes post-retirement as well as post-death, right? So friends, post-employment example could be gratuity, right? Other long-term employee benefits, what could be the other long-term employee benefits? For example, long service awards, for example, long-term incentive plans, right? So these are the other long-term employee benefits. Even leave encashment could be other long-term employee benefits. Termination benefits, if a company is terminating the employment of the employee before his date of retirement, or employee voluntarily decided to resign from the services of the employer, in that case it is covered under termination benefit. So termination includes termination from employer side or resignation from the employee side, both, okay? So these are the four kind of employee benefits, and whatever benefits you will say, it will be fitted into these four categories, right? Now let's discuss one by one. Short-term employee benefits means the employee benefit which is expected to be settled wholly before 12 months, okay? If something which is settled before 12 months, it is covered under short-term employee benefit, for example, salary, wages, and bonus. Post-employment benefits means the benefits which are given after employment, after completion of employment, okay? So it is known as a post-employment benefits. Gratuity, pension, provident fund are the examples of post-employment benefits. Other long-term benefits is kind of a residual category, the items which are not get covered into short-term employee benefits. Why? Because it has to be settled before 12 months. The items which are not only post-employment benefits, for example, gratuity is a post-employment benefit, so it will not be covered under other long-term benefits, right? or the item which are not termination benefits. If any item which is not covered into these three categories, it will be covered under other long-term employee benefits, and it is a residual category. Technically speaking, other long-term benefits are those benefits which are settled after 12 months, right, from the reporting period. Example could be sabbatical leave, jubilee benefits, and loyalty bonuses. These are the examples of other long-term employee benefits. I hope it is okay to everyone. Termination benefits. So termination benefits is payable on termination, or for example, voluntary retirement scheme. For example, if employer is terminating the employment of the employee, so notice pay is kind of a termination benefits. So I hope you guys have understood short-term benefits, post-employment benefits, other long-term employee benefits, and termination benefits. Yeah. Let me know if there is any problem. Please do let me know if there is any problem, because I'm not able to see the expression of the participants or any chat of the participants from the chat box. Okay, let's move forward. Short-term employee benefits. So short-term employee benefits are those employee benefits which are expected to be settled wholly before 12 months after the end of the reporting period in which the employees render the related service, right? So these are the examples of short-term employee benefits: wages, salaries, annual leaves, sick leave, profit sharing, bonuses, non-monetary benefits. So the accounting and recognition of short-term employee benefits is pretty straightforward. For example, the company is paying a salary. What could be the accounting entry? Salary expense account debit to salary payable account, salary payable account debit to bank account. So simple. You have to recognize the expense on an accrual basis, right? So the recognition of short-term employee benefit is straightforward. You have to recognize on accrual basis. If the employee is working on a project, right? If the employee is working, there is a factory which is under construction, an employee is working in a factory. So in that case, Ind AS 16, which you have read in the last class, Ind AS 16 says that such kind of employee benefit is required to be capitalized, right? So it will not charge to P&L if it is related with the construction of some fixed assets or some intangible assets, right? Bonus payable if employee remain in service. So of course, if there is a bonus payable, that has to be recognized on an accrual basis, right? So coming to the recognition principle of short-term employee benefits: wages, salaries on an accrual basis, non-monetary benefits on accrual basis, profit sharing and bonuses, right? So when there is a legal or constructive obligation, then profit sharing or bonuses is required to be recognized. For example, when you join a company, normally how this salary structure of the employees are structured, let me tell you. They will tell you that we will pay you 100 rupees as a CTC, cost to company, and out of this 100 rupees, 80 rupees is something which you will get in your salary every month, right? And 20 rupees is a retention kind of thing, or 20 rupees is a variable pay. If you will have a minimum level of performance, then we will pay you this 20 rupees. If you will have an extraordinary performance, we will pay you something extra on 20 rupees, right? And if you will not have any performance, if you will not deliver any performance, we will deduct your 20 rupees, will not pay you 20 rupees, right? So this 20 rupees, whether organization needs to accrue a provision of this 20 rupees, because it is payable after 1 year, and it is depending on the performance of the company and performance of the employee. So whether the organization need to consider the provision of this 20 rupees, answer is yes. It is kind of a legal obligation. If the employee will deliver a acceptable amount of performance, then the company is required to pay that 20 rupees which is there in his CTC letter or offer letter, right? So in that case, this bonus provision or this variable pay provision is required to be recognized. Now coming to what is constructive obligation. So Ind AS says that, and you guys have fortunately read this Ind AS 37, so you are well aware about constructive obligation, right? So what is a constructive obligation? So constructive obligation means due to the past pattern, due to the precedent, or due to the policies of the company, if it has created a valid expectation in the mind of the employees. मतलब कंपनी की पॉलिसी ऐसी है, कंपनी एम्प्लॉय फ्रेंडली कंपनी है, प्रॉफिट मेकिंग कंपनी है, और कंपनी क्या करती है, कंपनी एम्प्लॉइज को बोनस डिस्ट्रीब्यूट करती है, राइट? सो जो भी कंपनी को प्रॉफिट होता है उसका 10% कंपनी एम्प्लॉय को बोनस डिस्ट्रीब्यूट कर देती है. And I still remember I worked with ILFS, and ILFS was a company who used to distribute 10% of the profit to the employees, right? So in this case, if the company is paying 10% of the whatever the company will earn to the employees, in that case it is kind of a constructive obligation, and company is required to create a provision for bonus or provision for profit sharing, right? Now coming to the short term compensated absences. So the most important part is accounting of leave encashment or accounting for leaves, right? So this is the most important part. Now friends, there are two kind of leaves, okay? One is accumulating and the second one is non-accumulating. For example, the company says that every year you will be entitled to 30 leaves, okay? And for example, out of 30 leaves, you have availed 10 leaves, right? So now at the end of the year, you have 20 leaves, okay? If the company will allow you to carry forward those 20 leaves in the next year, it is known as accumulating, right? If the company will not allow you, to carry forward those 20 leaves in the future or in the next year, it is known as non-accumulating. So आपका 30 leaves का entitlement था और आपने 10 लीव्स करंट ईयर में अवेल कर ली, 20 लीव्स आपने करंट ईयर में अवेल नहीं करी, ओके? सो 20 लीव्स अगर आप कैरी फॉरवर्ड कर सकते हो फ्यूचर में अवेल करने के लिए या इन कैश कराने के लिए, इट इज नॉन एज एक्यूमुलेटिंग. अगर आपको फ्यूचर में इनकैशमेंट या अवेलमेंट अलाउड नहीं है, कैरी फॉरवर्ड करना ही अलाउड नहीं है, इट इज नॉन एज नॉन एक्यूमुलेटिंग, राइट? सो इन केस ऑफ अ नॉन एक्यूमुलेटिंग लीव्स, nothing is required, no future provision is required. Why? Because these leaves got lapsed, okay? These got lapsed, okay? So no provision is required. But what about accumulating? In accumulating, you have two options. One, when the leaves will be accumulated and carried forward, so tomorrow in the next year, if the employee will not be able to avail the leaves, so the company will pay him cash. It means encashment policy is there. This leave could be encashed, right? Or this leave could not be encashed, but employee can avail the leave in the next year. For example, today in the current year I have availed 10 leaves, so I can carry forward my 20 leaves and I will enjoy these 20 leaves in the next year, right? So this is known as a no encashment but availment, right? So friends, if the encashment option is there, अगर वो carry forward करने के बाद encashment हो सकती है, so then the company has to create a provision on the basis of remaining number of leaves which are going to be carried forward. So company has to create a provision for it. अगर encashment का option नहीं है but वो leave carry forward करने के बाद avail कर सकता है employee, in that case the company has to create a liability or a provision, and that has to be adjusted with the probability of leaving. For example, the company expects that out of 1000 employees, let's say 10 leaves are carried forward, so in total 10,000 leaves are carried forward. But company knows that out of 1000 employees, 50 employees will leave the company and they will not be able to avail their leaves. So it means the company has to create a provision for leaves for 950 employees, right? Or the company expects that, for example, there are finance employees in the company, 100 finance employees, and in the next year the company has a merger, acquisition, new compliances, lot of audits, and the company believes that finance guys will not be able to avail the leaves in the future. In that case, company has to keep this in consideration, and company will create a provision to the leaves on the basis of best estimate to the extent of number of leaves which can be adjusted in future, right? So I hope it is clear to everyone so far. And organizers, just let me know that I need to speak in English only, or I can use Hindi as well as English. Okay, let's move on. Let's discuss this case study. ABC Limited has a practice of paying a performance bonus to its sales staff. So this is a case of recognition of bonus or profit sharing, right? So ABC Limited has a practice of paying a performance bonus to its sales staff. Past evidence indicates that the staff who meet their sales targets received a bonus of 10% of their current salary package at the year end. So past evidence says that. Past evidence, what does it mean? It means there is a constructive obligation. Okay. So whomsoever will meet the sale target will receive a bonus of 10% of their current salary at the year end. Okay. Sales staff who are not in service throughout the whole year received a bonus in proportion to their service period. For example, the sales staff who have joined in between, in the middle of the year, so they will get a bonus to the extent of 5% or to the extent of 50%, right, for 6 months proportion. The bonus are paid in the first quarter of the following year. For example, the year is April to March, so bonus will be payable in the April to June quarter. Okay, to the sales staff who are still employed by the entity at the year end. Okay, so bonus are paid in the first quarter of the following year to the sales staff who are still employed by the entity at the year end. So who will get the bonus? So only those employees will get the bonus who are still remain with the company till the year end. At the year end, 7 of the sales staff meet their sales target. Am I audible? Because there is a power cut. Am I audible? Hello? Hello? Yeah, at the year end, 7 of the sales staff meet their sales targets. 2 of the 7 began their employment halfway through the year, and 1 of them left the entity at the year end. Okay. So at the year end, 7 of the sales staff meet their sales target. Okay. So 7 people has met their sales targets, and 2 of the 7 began their employment halfway through the year. Okay. So out of 7, 2 have joined in between, so they will get the 50% bonus. And 1 of them left the entity at the year end. But out of 7, 1 was not with the company at the year end. Okay, so it means 6 people will get the bonus, and out of 6, 2 will get the bonus for 50 for the half of the year, and 4 will get the bonus for remaining 4 will get the bonus for full year. So what is the recognition? The recognition is 4 to receive 10% and 2 to receive 5%. This will be the bonus recognition, or this will be the recognition of profit sharing or bonus in the books of the company. Okay. Another case study: an entity has 100 employees who are each entitled to 5 working days of paid sick leave for each year. So total 100 employees. Every employee is entitled to 5 working days of paid sick leave for each year. Unused sick leave may be carried forward for 1 calendar year. If there is any unused sick leave, so that has to be carried forward for 1 calendar year. Sick leave is taken first out of the current year's entitlement. Okay, if there is a sick leave, so it has to be adjusted from the current year entitlement, and then out of any balance brought forward from the previous year on a LIFO basis, right? For example, if I am an employee and I have a brought forward sick leave of, let's say, 7 days, okay, and current year entitlement is 5 days, and I'm taking a sick leave of, let's say, 10 days. So first 5 days has to be adjusted from my current period, which is 5, and the remaining 5 has to be adjusted from the last year of 7 days. Okay, and it has to be carried forward for 1 calendar year only. Okay, so it means beyond 1 year, whatever is unused, that has to be lapsed. Okay, at sick leave is taken, okay, at 31st December 2001, the average unused entitlement is 2 days per employee. Okay, so on 31st December 2001, what is the average unused entitlement? It is 2 days per employee. So total 100 employees multiplied by 2, the total unused leaves are 200. Okay, the entity expect, on the basis of experience, that is expected to continue, that 92 employees will take no more than 5 days of paid sick leave in 2000. So the entity expect that 92 employees will be able to take only 5 days sick leave in the next year. So what does it mean? It means that 5 days sick leave first has to be adjusted from the next year's sick leave. Okay, तो उनको 5 लीव का इंटाइटलमेंट मिलेगा और वो 5 ही अगर अवेल करेंगे तो इसका मतलब करंट पीरियड का वो कुछ भी अवेल नहीं करेंगे, राइट? सो आउट ऑफ 100 एम्प्लॉइज 92 एम्प्लॉइज का मुझे पता है, जो मेरा बेस्ट एस्टिमेट है वो ये कहता है कि मेरी जो 92 एम्प्लॉइज की मल्टीप्लाई बाय 2 जो सिक लीव है वो मैं अवेल नहीं कर पाऊंगा, एंड दैट द रिमेनिंग 8 employees will take an average of 6.5 days each. Okay, and it says that for the remaining 8 employees, the sick leave which can be availed is 6.5 days. What does it mean? So if 6.5 days is there, so it means 5 days sick leave will be adjusted from the current year, and 1.5 multiplied by 8, 12 sick leave will be adjusted from the last year. So how much provision has to be created for the leave? The provision is to be created for 12 days of sick pay, 12 days of sick leave, right? So this is the provision which has to be created in the books of the company. Coming to the post-employment benefit, what could be the post-employment benefit? Post-employment benefit could be gratuity, could be PF, could be your pension. Okay, these are the post-employment benefit. Now, how to recognize the post-employment benefit? So guys, most important part. In case of a post-employment benefit, there are two kind of plan. One is defined contribution plan and defined benefit plan. What is meant by defined contribution plan and what is meant by defined benefit plan? If it is an active voice, just make it a passive voice. Defined contribution means where contribution is defined. Defined benefit means where benefits are defined. So can you give an example of defined contribution plan and defined benefit plan? So coming to the defined contribution plan, so the classic example is Provident Fund. If you have to pay a salary of 100 rupees, basic salary 100 rupees, you have to pay a 12% of PF. Okay, 12% of basic salary. So you have to deposit a PF of 12 rupees. Is it clear? Yeah. If tomorrow the salary is 200 rupees, so you have to pay 200 multiplied by 12%, 24 rupees of Provident Fund. It means the contribution is defined. It means the contribution is defined. Okay, so the Provident Fund is classic example of defined contribution plan. Okay. So defined contribution plan are those plan where the entity pays agreed contribution into a plan and has no further liability. For example, the entities are paying a defined contribution, which is a Provident Fund, into the government's plan, right? And in case of a defined benefit plan is a plan where benefits are defined. And what could be the classic example? Gratuity. For example, in case of a gratuity, the contribution is not defined, the benefit is defined. For example, let's say I am taking an example, my age is, let's say there is a person, Ram, who is a chartered accountant. He had joined the company at the age of 25 and his salary was 10 lakh rupees. He will retire from the company at the age of 58 years. Okay, so it means after 33 years, he will retire from the company. And when he joined, the salary was 10 lakh. So when he will retire, for example, at the rate of 10% hike, his salary would be, let's say, 2 crores rupees, right? His salary will be 2 crores rupees. Now tell me, the gratuity which is payable to him, is it related with the every year salary? Can I say that, okay, in the first year the salary was 10 lakh rupees, so the gratuity payable would be 10 lakh multiplied by 5%. Next year 15 lakh rupees plus 15 lakh multiplied by 5%. Answer is no. In case of a gratuity, the formula for gratuity is 15 by 26 multiplied by last drawn salary multiplied by completed year or part thereof in excess of 6 months. Okay, so it means in case of a gratuity, the contribution is not defined, the benefit is defined. Okay, 15 by 26 multiplied by last drawn salary. So Ram will get a gratuity on the basis of last drawn salary, which is at the age of 58th year, and we are not aware that what would be the salary at the age of 58th year. It means it will require some estimation, it will require some actuarial calculations, right? So here benefits are defined, here contribution is not defined. So in this case, benefit to be paid is certain and finance to be done accordingly. So we know that that we need to pay these benefits. Okay, and accordingly either we need to create a corpus or we need to create a liability, right? So in case of defined contribution plan, we have to recognize on an accrual basis. For example, 100 rupees is the basic salary, so provident fund is 12 rupees. So entry क्या होगा उसका? Provident fund expense account debit to provident fund payable account, right? Provident fund payable account debit to bank account. But in case of a defined benefit plan, you have to do the actuarial valuation. For gratuity, you have to do the actuarial valuation, right? So that you can determine the calculation, what should be the liability today. Okay, because the actual outflow will happen when the employee will retire or when the employee will leave the organization. But what is my outflow today? What is my liability today? Okay, and in case of a defined benefit plan, this defined benefit plan has to be recognized, has to be accounted for using the projected unit credit method. What is meant by PUCM? What is meant by projected unit credit method? Means प्रोजेक्टेड यूनिट क्रेडिट मेथड का मतलब आपको हर एक यूनिट को, हर एक साल को एक यूनिट मानते हुए आपको उसको क्रेडिट देना है और उसकी प्रोजेक्शन करनी है. फॉर एग्जांपल, if I'll complete 1 year in my organization, okay, so for 1 year my gratuity is already due. When I'll complete second year, my gratuity will be due for 2 years. 3 years, gratuity will be due for 3 years. 4 year, gratuity will be for 4 years. So on and so forth. Every year, by passing of every year, by providing a service in every year, my gratuity balance will go up. Okay. So this is known as a projected unit credit method. Every year I have to account for what is my liability today. Okay. So I have to calculate the future liability. Then I will discount that future liability as on date, and it will give me my what is my current liability. So this method is known as projected unit credit method, and actuarial are using this projected unit credit method for calculation of gratuity, for calculation of provision for gratuity. Okay. So friends, in case of defined contribution plan, so whatever is payable minus already paid will be your liability. If you have paid extra, that will be your asset or prepaid expense. Okay. And in case of PF, the recognition and accounting is straightforward, simple. Okay. But in case of defined benefit plan, you have to use a projected unit credit method, which is an actuarial method, right? Now my first question is, how many of you have read an actuarial valuation report? How many of you have read an actuarial valuation report? Okay. So let's say if there are, how much participants are there? For example, if there are 127 participants, so probably how much participants have seen the actuarial valuation report? So you will say that 20 or 25. Okay, I'm flipping my question. How many of you have seen an actuarial valuation report? Probably the number should go up. Yeah. Third question. Requirement of Ind AS 19 to get an actuarial report. सर ये तो ऐसा स्टैंडर्ड है एक्चुअली को काम करना, हमें तो काम करना नहीं, एक्चुअल रिपोर्ट आएगी and we will look at the disclosure and we will just copy paste the disclosure. Is it that? Answer is no. So today I'll tell you how this actuarial valuation works, right? So what are the steps which are required to be followed for defined benefit plan? Okay, first of all, you need to carry some actuarial assumptions. What could be the actuarial assumptions? There are two kind of actuarial assumptions, financial assumption as well as demographic assumptions, right? I'll tell you. And then actuary will discount the future liability into the current liability. Okay, for example, I am an employee, okay, and I have joined 15 years back, I have joined an organization at the age of 25. Today I am, let's say, 40 years. And after 18 years, I'll retire. So how organization will compute my gratuity? Organization will compute that what is my current salary. Okay. What is the salary escalation rate in my organization? For example, 10%. So after compounding 10%, what will be my future salary? Okay. And for example, my future salary would be, for just I'm taking an example, 5 crore rupees. So what will be the value of the gratuity after 18 years basis 5 crore of salary? For example, 1 crore rupees is gratuity value. 15 by 26 multiplied by last drawn salary multiplied by completed year of service or part thereof in excess of 6 months, right? So after 18 years, I'll get a gratuity of 1 crore rupees. Now, what is the value of that gratuity today? So it means I have to discount that 18-year future liability into the current period liability. Okay, so I have to discount that. I have to keep that gratuity at a present value. Okay, that at a present value. So that is why it is known as a present value of future obligations, present value of defined benefit plan. So when you look at the schedule of actuarial report, it says that present value of defined benefit plan. Okay, present value of defined benefit plan. So friends, while using a projected unit credit method, every year has to give a weightage, and that is why every year we have to add a service cost. Every year we have to add a service cost. Okay, and let me show you a practical actuarial report on an Excel file, so that you will be able to understand the concept of this actuarial report. Let me know if this Excel file is visible, friends. Let me know if the Excel file is visible. Anyone from WIRC, if confirm that this Excel file is visible. Just a minute. Yeah. So friends, first of all, there are two concepts for defined benefit plan. One is funded, one is unfunded, right? For example, when you see the balance sheet of Reliance Industries Limited, you will find there is a plan asset and there is a liability. Okay, so normally what company does, for example, the company has a 1000 employee, and let's say after 20 years, these out of 1000 employees, 500 employees will retire. Then what will happen? The company has to pay out a cash outflow, the company has to pay a liability for the gratuity, right? The company has to pay a liability, and at that point of time the company will need a huge cash. So some companies, what some companies will do, some companies create a corpus, or some companies create a plan asset. Okay, for example, LIC is offering a gratuity plan asset, right? So every year the company is paying some contribution, and the company will deposit that contribution in LIC plan. Okay, and LIC will invest that contribution in some assets, in some investments, and due to this, every year there will be some kitty, or there will be some deposit of contribution, and that will be used to settle the employee liabilities, right, in future. And the investment will also earn some interest. Okay, so that the corpus will grow. So this is known as a funded. This situation is known as a funded. Okay, in this case there will be a plan assets. For example, in case of a gratuity, the company is invested in a LIC plan. Okay, so every year at the end of every reporting period, the company has to measure a fair value of the plan asset. What is the plan asset? It is an investment, and what is the fair value of the plan asset? The company has to, the LIC will tell you what is the fair value of plan asset. For example, the fair value of the plan asset is 90 rupees, and while doing actuarial valuation, you will find that there is a present value of defined benefit obligation, there is a present value of liability today is 100 rupees. So net, what is your liability? Your liability is 100 minus 90. Okay, your liability is 100 minus 90. So 10 rupees liability will be shown in the balance sheet, which is liability minus asset. The second situation, there is unfunded. Reliance has a funded gratuity plan. Okay, Bharti Airtel, Bharti Infratel, these companies are unfunded plan and unfunded gratuity plans. So they have not invested any corpus in any plans. So whenever the employee will retire, or whenever the employee will leave the organization, they are paying cash to the employee at that point of time. Okay, so they have to pay a cash. So in this case, there is no plan asset, so there will not be any fair value of plan asset. So the total liability of 100 rupees will be the present value of defined benefit obligation. So in the balance sheet of Reliance, you will find a liability of 10 rupees, but in the balance sheet of Bharti Airtel, you will find a liability of 100 rupees. Why? Because they don't have the plan asset, right? So this is the concept of funded, and this is the concept of unfunded. You will find in some balance sheet that the company has a funded gratuity plan, the company has an unfunded gratuity plan. So unfunded means the company has not invested any corpus for the sake of paying a liability in future. A funded means the company has invested in a corpus for paying a liability in future. Okay, I hope it is clear to everyone so far. Now let me talk about the actuarial valuation. let me talk about the actuarial valuation. Okay, and just a minute. Okay. Oh, sorry. Yeah. Okay. So guys, while reading actuarial report, let me start with with a case of a gratuity. For example, an employee who had joined a company at the age of 25 years. At the age of 25 years, and his salary was 10 lakhs at that point of time. Okay, he will retire at the age of 58 years. Retire at the age of 58 years. So at the time of retirement, now, so let's hold here. So now, what is the amount of gratuity that is payable after at the time of retirement? Of course, 15 by 26 multiply by, sorry, so 15 by 26 multiply by last drawn salary. So last drawn salary at the age of 58, last drawn salary, yeah, multiply by completed year or part thereof in excess of 6 months, for example 33 years, right? So this is the benefit. Now I have to calculate the future liability first. Okay, I have to calculate the future liability. Now future liability will depend on so many assumptions. What are the assumptions? First assumption, that the salary which is today's salary will not be the future salary will not be the same as of today's salary. Why? Because there are some escalations, there are increments. So first assumption, the actuary has to take an assumption कि increment कितना होगा, हर साल 10% increment होगा, 8% increment होगा. So first assumption is salary increment assumption. Second assumption, what is the second assumption? Whether employee will live at the age of 58 years. Mortality rate क्या है? इस एज का एम्प्लॉय, इस ग्रुप का एम्प्लॉय का इंडिया में मोर्टेलिटी रेट क्या है? फॉर एग्जांपल, इस एज के आउट ऑफ 1 लाख एम्प्लॉइज 1 एम्प्लॉय विल डाई. ओके, so you must have seen that actually are taking a mortality rate from LIC census or IALM, Indian Assured Lives and Mortality census, right? You must have seen that LIC or IALM. Okay, they will take this from LIC or IALM. Okay, LIC or IALM. Is it clear? Right? So the first assumption was salary increment. The second assumption was mortality rate. The third assumption, whether employee will be in the organization till the age of 58 years or he will leave the organization before that. So the third one is attrition rate. The third one is attrition rate. Okay, so I have to take all these assumptions into my mind, into my calculation, and after that I will calculate the future obligation. And now I have to discount this. For example, I'm talking about today and he will retire after 33 years. So I have to discount that future liability into the today's liability. So I have to do the discounting. And for the discounting, I have to calculate the discount rate. आपको discount rate calculate करना पड़ेगा. तो आप discount rate कैसे calculate करोगे? इसका मतलब सबसे पहली बात, अगला assumption क्या होगी? आपको देखना है कि employee की average life कितनी है, employee की average बची हुई life कितनी है. Okay, so whatever will be the average life of the employee, the discount rate has to be calculated on that basis. For example, आपने कभी सोचा है, अगर आप रिलायंस की बैलेंस शीट देखो, इन्फोसिस की बैलेंस शीट देखो, भारतीय एयरटेल की बैलेंस शीट देखो, you will find that the discount rate is different in every company. why discount rate is different in every company? सब इंडिया के इकोनॉमिक एनवायरनमेंट में ये ऑपरेट कर रहे हैं. All these companies are operating in India, same economic environment, same geography. Then why discount rate is different in every entity? The discount rate is different in every entity because discount rate is on the basis of remaining average life. Okay, remaining average life. जिस कंपनी में यंग एज के एम्प्लॉय ज्यादा होंगे वहां पर रिमेनिंग एज, अनएक्सपायर्ड एज वहां पे ज्यादा होगी, एवरेज रिमेनिंग लाइफ ऑफ एम्प्लॉय ज्यादा होगी। तो मान लीजिए अगर वहां पर 25 साल की एवरेज रिमेनिंग लाइफ है तो आपको डिस्काउंट रेट आपको देखना है 25 साल का, गवर्नमेंट का बॉन्ड रेट, गवर्नमेंट का गिल्ड सिक्योरिटीज का रेट 25 साल के लिए क्या है, एंड यू हैव टू यूज दैट रेट फॉर डिस्काउंटिंग। अगर किसी ऑर्गेनाइजेशन में ओल्ड एज एम्प्लॉय ज्यादा हैं तो वहां पर रिमेनिंग लाइफ कम होगी। फॉर एग्जांपल अगर एवरेज एज ऑफ एम्प्लॉय 40 है तो रिमेनिंग 18 ईयर्स ही होगी ना, तो वहां पर आपको जो डिस्काउंट रेट देखना है, यू हैव टू लुक from the 18 years discount rate perspective. So friends, there are two kind of assumption, one is financial assumption and one is demographic assumption. Financial assumptions को economic assumptions भी कहते हैं, and there are another assumption is demographic assumption. Okay, what could be the financial assumption? Financial assumption could be the salary increment rate, salary increment rate, discount rate. Okay, so as an auditor you need to ask from the management कि आपने अपने बजट में, आपने अपने एओपी में कितना सैलरी इंक्रीमेंट रेट लिया है, व्हाट इज द डिस्काउंट रेट, यू हैव टू आस्क फ्रॉम द मैनेजमेंट कि मुझे बताओ तुम्हारी एवरेज रिमेनिंग लाइफ कितनी है, या एक्चुअली से पूछो, और ये बताओ कि अगर एवरेज रिमेनिंग लाइफ 15 साल है तो मुझे इसका डिस्काउंट रेट दिखाओ कि गिल्ड सिक्योरिटीज का 15 साल का रेट क्या आता है। इन्वेस्टोपीडिया से या इन्वेस्टोमार्ट से आप मुझे दिखाओ कि उसका रेट क्या आता है, यू कैन चेक दैट रेट, राइट। व्हाट इज द डेमोग्राफिक एजम्पशन? मोर्टालिटी रेट is the demographic assumption, right? Attrition rate, in the organization where the attrition rate is higher, the liability will be lower. Mortality rate, attrition rate, average remaining life of the employee, etc. So these are the assumptions, and these assumptions are required to calculate the actuarial valuation, calculate the actuarial calculation of gratuity on the projected unit credit method, right? So friends, now let's discuss actuarial report. Okay, so first of all we need to discuss actuarial report. हम एक complete actuarial report discuss करते हैं so that you will be able to understand how this actuarial report will be look like. Okay, मैं डिस्कस जो कर रहा हूं मैं उसकी कर रहा हूं कि फॉर एग्जांपल रिलायंस की कर रहा हूं जहां पर आपका प्लान एसेट भी है और ऑफ कोर्स ऑब्लिगेशन तो होती ही है, तो इनका फंडेड है। सबसे पहले हम बात करते हैं, फॉर एग्जांपल द प्लान एसेट, द वैल्यू ऑफ द प्लान एसेट इज 100 रुपीज। ओके, ओपनिंग में जो फेयर वैल्यू थी प्लान एसेट की वो 100 रुपए की थी। कंपनी ने ड्यूरिंग द ईयर 50 रुपए का कॉन्ट्रीब्यूशन दिया। व्हेन द कंपनी हैज गिवन द कॉन्ट्रीब्यूशन तो क्या होगा, आपकी प्लान एसेट की वैल्यू बढ़ जाएगी, एसेट का बेस बढ़ जाएगा। ओके, एंड कंपनी ने एस्टिमेट किया था कि जो एसेट पे कमाएंगे, जो ओपनिंग वैल्यू है उस पर 20% का इंटरेस्ट कमाएंगे हम। ओके, वी विल अर्न एन इंटरेस्ट ऑफ 20%। ओके, सो व्हाट इज माय एस्टिमेटेड इंटरेस्ट इनकम? माय एस्टिमेटेड इंटरेस्ट इनकम इज 100 मल्टीप्लाई बाय 20%। सो जब मुझे इंटरेस्ट आएगा तो मेरे प्लान एसेट की वैल्यू बढ़ जाएगी, मेरे एसेट का कॉर्पस बढ़ जाएगा। लेस सेटलमेंट, कुछ एम्प्लॉइज ड्यूरिंग द ईयर छोड़कर चले गए और कंपनी ने 10 रुपए की उनको लायबिलिटी पे कर दी। कहां से पे करी? कॉर्पस से पे करी। कंपनी ने एस्टिमेट किया था 20% का इंटरेस्ट आएगा, 20% की इनकम आएगी, लेकिन एक्चुअल में इनकम आई 25 रुपए की। सो व्हाट इज दैट 25 रुपए? 20 के अगेंस्ट में 25 रुपए आए, 20 के अगेंस्ट में 25 आया। इसका मतलब द डिफरेंस बिटवीन द एस्टिमेशन एंड एक्चुअल is known as a actuarial gain for losses. We have estimated that we will receive 20 rupees, but actually we received 25 rupees. It means 5 rupees actuarial gain. Okay, and this will go into the actuarial gain. Okay, this will go into the actuarial gain, right? Now coming to the, so my closing value of plan asset, PA is nothing, it's a plan asset. My closing value of plan asset is 165 rupees. My opening value of plan asset is 100 rupees, right? Now the second liability schedule, opening value of defined benefit obligation. Opening value of defined benefit obligation. What is the opening value of defined benefit obligation? For example, the opening liability was 150 rupees, and now there is a concept of current service cost. What is the current service cost? Going by the projected unit credit method, whenever the employee will render the service in the organization, the service cost will go up, right? For example, when the organization was 1 year old, so service cost was 1 year. It means the employee has served 1 year only. When the employee will serve another year, so for in the another year the service cost will be added. The opening value of the liability was 150, and since the employee has rendered one more year, so current service cost needs to be added. That what is my current service cost in the gratuity? Okay, for example, it is 15 rupees. Past service cost, what could be the past service cost? I'll take a classic example of ILFS. In ILFS, normally the company is paying 15/26, 15 days gratuity. They were paying 30 days gratuity to the employees. Okay, so for example, if the employer is changing any plan, for example, today the organization is, let's say, 5-year-old organization, they are creating a gratuity provision since last 5 years, and today they have changed the plan, they have amended the plan, and they are saying that instead of 15 days we will pay 30 days gratuity. So of course this 30 days impact, of course this impact will be there for the last 5 years also. Okay, so when I will get a gratuity, of course I'll get a gratuity on the basis of 30 days, right? On the basis of 30 days. So my past service cost will also get amended. My past service cost, my last 5-year cost is also going to be revised. Okay, due to the last 5 years which I have already served, so my current portion will go into the current service cost, but for the last 5 years past service cost will also be there. For example, due to this amendment in plan, the past service cost will be 20 rupees. Okay, interest cost, this is a very classic case. For example, 20% is the interest rate. What is the interest cost? 150 multiplied by 20%. So friends, if you want to see or check the interest cost in the books of Reliance or in the books of Infosys, just open their annual report, go to the actuarial section and just look at the discount rate, opening discount rate, and when you will look at the discount rate, just multiply the discount rate with the opening value of defined benefit obligation. You will find the interest cost debited in the books of Reliance, right? Less settlement. What is my settlement? You remember 10 rupees we have settled with the employee. So opening liability was 150, opening liability at the beginning of the year. Due to the current year service, the service cost have been increased by 15. Due to the change in the plan, the current service cost has to be increased by 20 rupees more. And since it was an opening liability, it was a discounted value at the beginning of the year, we have to unwind this discount. So interest cost will be 30. Settlement is 10 rupees. And for example, we have expected, for example, we have taken a salary escalation rate of 8%. I'm just taking an example. But the company has paid, the actual increment which the company has paid is 8.5%. It means there is a variation of 0.5% from estimation versus actual, right? And this has resulted into an actuarial loss of 2 million. Okay, so the difference between estimate and actual, if it is favorable, it is actuarial gain. If it is unfavorable, it is a hit, it is actuarial loss. So by this, my closing present value of defined benefit obligation comes out at 207 million. 207 million, right? And what is my closing value of plan asset? It is 165 million. So what is my balance sheet presentation? My balance sheet presentation is my liability balance minus my plan assets. It is 42 million. Okay, and what will go into the P&L? Let me tell you, this interest income will go to the P&L. Okay, and this interest income will go to the P&L, and this current service cost, past service cost, and interest cost, these three items will also go into the P&L. These three items will go into the P&L. Okay, so what is my P&L impact? My P&L impact is 15 rupees current service cost, 20 rupees past service cost, 30 rupees interest cost minus 20 rupees interest which I have received. 45 rupees is my P&L item. What will go to the other comprehensive income? The actuarial gains and losses will go to the other comprehensive income. So this one OCI and this actuarial loss OCI. So I have earned 5 rupees and I have lost 2 rupees. So 3 rupees is my OCI. This is my gain. This is my gain. This is my expense. And this is my actual liability in the balance sheet. Okay. So I hope you guys have understood this actuarial valuation thing. I hope you guys have understood this. Let me know if you have any question. Mr. Vaibhav, are you able to hear me? So whether the participants have any question? Because I want to take the question right now. Mr. Vaibhav, are you able to hear me? Are you able to hear me, guys? Okay, let's move on. Now let's move on to the presentation. So guys, I have explained the actuarial valuation, and I believe you guys have got some comfort that how this actuarial report has to be read, right? So we have discussed that there are some assumptions, actuarial assumptions, which we need to take. So one is financial assumption and demographic assumptions, right? And the actuary has to use a projected unit credit method for discounting the future liability to arrive at a present liability, which is known as a present value of defined benefit obligation. Actuary has to compute the fair value of plan assets. Okay, fair value of plan asset needs to be calculated. Okay, then the actuary has to determine the total amount of actuarial gains and losses, and how this actuarial gains and losses has to be determined. The actuarial gains and losses has to be determined on the basis of what was my estimation and what is the actual. What is my estimation and what is the actual? Okay, estimation and actual. Okay, and wherever a new plan has been introduced or changed, so there will be impact on a past service cost. Okay, and there could be a curtailment or settlement also. For example, earlier the plan was, you know, earlier the employer was providing a 30 days gratuity, right? Now the employer has decided that okay, I'll go by the law and I will give you 15 days gratuity only. So in this case, it is known as a, of course there is a favorable impact on the past service cost, but it is known as a curtailment or settlement. So the word has been changed. When there is a favorable impact in the P&L, it is known as a curtailment or settlement. When there is an unfavorable impact, it is known as a past service cost. Okay, so this is the only change. I hope it is clear to everyone. Yeah, so we have discussed this part, your defined benefit plan, your defined contribution plan, projected unit credit method. Okay, so we have discussed that, and we have discussed that if there is a plan asset, if there is a plan liability, so if asset is more, you have to recognize an asset. If liability is more, you have to recognize liability minus asset is equal to actual liability, right? So now coming to the third category, which is other long-term benefits. So let me tell you, for example, leave encashment, for example, profit sharing and bonus payable, for example, long service awards. So these are the long-term employee benefits for which the organization are also getting the actuarial valuation done. But for other long-term benefits, actuarial valuation is not mandatory. Okay, and in case of a defined contribution, defined benefit plan under post-employment plan, the actuarial gains and losses will go to the OCI. But in case of other long-term benefit, everything will go to the P&L. For example, if there is a actuarial gains and losses for leave encashment, so that actuarial gains and losses will also form part of the P&L. It will not go to your OCI, right? So this is the only difference between other long-term benefits and defined benefit plan under post-employment benefit, right? Coming to the fourth benefit, what is meant by termination benefit? So termination benefit, अगर employee खुद ही resign करता है and employee decided to accept a voluntary retirement, so it is again coming under the termination benefit. Or employee is not deciding, employer is terminating an employee's employment before the normal retirement date, it is also covered under termination benefit, right? So how to calculate the termination benefit? Of course, the termination benefit has to be calculated as per Ind AS 37 on the best estimation basis. If it has to be paid after 1 year, so discounting is required for calculating the present value, right? Coming to the disclosure requirement, let me tell you, for short-term employee benefit, there will not be any actuarial valuation is required, no actuarial valuation is required, and no disclosures are there, right? But as per Ind AS 24, let me tell you, as per Ind AS 19, there are no disclosures for short-term employee benefit. But as per Ind AS 24, the disclosures of employee benefit for key managerial personnel are required into these different categories. Okay, as per Ind AS 24, which we will discuss. For post-employment benefit like gratuity, which is defined benefit plan, actuarial valuation is required and disclosures are also required. Right? For other long-term benefits, actuarial valuation is required, or even you can do your do the calculation on your behalf or yourself as well. But you can also get it done through actuarial. Most of the companies are getting it done through actuarial, like leave encashment, long service award. But disclosures are not mandatory for other long-term employee benefits. Like we are not doing the disclosure of other long-term employee benefits. Termination benefits, no actuarial valuation is required and no disclosures are required. But for the termination benefits, normally organizations are doing the disclosure as per Ind AS 37. Okay, so termination benefits payable after 12 months needs to be discounted. This needs to be discounted. Okay, clear? Coming to the comparison between Ind AS 19 versus accounting standard 15. So the actuarial valuation is based on certain assumption, and changes in these assumptions give rise to actuarial gains and losses. For example, changes in estimate of salary or medical cost, right? So if there is a variation in the estimates versus actual, in accounting standard, everything goes to P&L. Actuarial gains and losses goes to P&L. But in Ind AS 19, it will go to the actuarial gains and losses on defined benefit plan will go to your other comprehensive income. In accounting standard, there were no concept of other comprehensive income. In Ind AS 19, there is a concept of other comprehensive income, right? So now coming to the just 2-3 case studies, quickly I'll cover. According to Ind AS 19 employee benefit, which one of the following terms best describe benefits which are payable as a result of an entity's decision to end an employee's employment before the normal retirement date? What is the right answer? Termination benefit, right? According to Ind AS 19 employee benefit, which one of the following statement best describe other long-term employee benefit? Benefit which are payable after completion of employment. This is post-employment benefit, right? So this is not the right option. Benefits not falling due wholly within 12 months of the end of the period in which the service is rendered. Benefits payable as a result of an entity's decision to end an employee's employment before the normal retirement date. It is a termination benefit. Benefit not expected to be settled wholly within 12 months at the end of the period in which the service is rendered. At the end of the period in which the service is rendered. So benefits not expected to be settled wholly within 12 months of the end of the period in which the service is rendered. Okay, so which is the right answer? This is the right answer, of the end of the period, right? So this is the favorite slide of the participant. Thank you slide. So organizers just let me know if the participants have any question on Ind AS 19. Otherwise I'll move on and I'll start my another standard. So I'll take a just 1 minute pause here before starting the another standard.
Hello, Alok sir.
Yes,
Hello.
Mr. Vaibhav, just yeah. Just I was calling you to check if there are any queries, because I'm not able to see the chat box, or I'm not able to see any participants, inputs. Yeah, Mr. Vaibhav, am I audible?
Sir, yes sir. Yes sir.
Participants की कोई query है Ind AS 19 पे?
हाँ सर है, मैं दे रहा हूँ सर, आपको क्वेश्चन दे रहा हूँ सर.
Yeah, please tell me.
First question, sir.
Yeah. Yes. So the first question is regarding if there is a new organization and the employees are into the probation. So is it still applicable? Yes, it is still applicable. The company has to estimate that how many employees will be able to complete the probation period, and they will be confirmed. So of course, whenever we are doing an actuarial evaluation, we need to estimate the mortality rate. We need to estimate the attrition rate as well. That how much of employees will be able to serve the organization for how much period. What are sabbatical leaves? Sabbatical leaves, for example, in case of a listed organization or a big organization, the senior management who, let's say in my organization, there is a policy. If you are a person who is at general manager level or above, you are, let's say, if you have completed 3 years, so you can join IIM programs, right? So for, let's say, 6 months or 1 year. So normally people take a education leave. Okay, so it is known as a sabbatical leaves. What about joining bonuses? Yes, joining bonuses are also within the purview of Ind AS 19, and these are the short-term employee benefits which has to be accrued on a accrual basis. So whenever, for example, for example, companies or employer are saying that whenever we'll join the company, we'll pay you joining bonus after 1 month, or let's say after 2 months, right? So in that case, whenever the employee will complete 1 month or 2 months, so employer has to recognize the provision or expense for the joining bonus, right? What salary basis is taken when provision is to made at a group level? For example, 8 employees, 1.5 sick leave in the given example. When employees belong to different salary slabs, so let me tell you. So the calculation of gratuity or the calculation of leave encashment is on an employee basis, right? So for example, when I am sharing the data to the actuary, when my organization is sharing the data to the actuary, so what they are doing, so they are giving the list of employees, they are giving the basic salary of the employees, they are giving the remaining leaves of the employees, they are giving the date of birth of the employees, so that actuary will determine, okay, that how much, and they are also giving the date of joining of the employee. So it is on an employee basis, right? Do we need to create the actuarial valuation leaves for 3 months if the leaves are accumulated till December? Every year leaves expires every December. If the leave are expiring every December, in that case, it is not required to do actuarial valuation. Any more questions? Mr. Vaibhav, any other questions are there?
Yes, sir.
It is done. वैभव जी हो गए? Participants, are you able to understood this concept? What is meant by service cost? So I told you, for example, in the first year, of course, employee has served the organization, okay, and the salary was 100 rupees, for example, right? So 100 multiplied by generally 4.75%. So 100 multiplied by 4.75% is a service cost. So whenever the employee is serving an organization, so every year his entitlement will go up, right? For example, at the end of 5th year, I'll get a salary of, I'll get a gratuity for 5 years. At the end of 6th year, I'll get a gratuity for 6 years. Okay. So service cost means due to the salary, the value of the gratuity will go up, right? So service cost means due to the service rendered from an employee to the employer, what is the gratuity which is going to be increased? It is known as a service cost. Why the interest cost is considered on the opening obligation? It is considered on the opening obligation because the opening obligation is present value of the future obligation. So what is the present value of future obligation? It is a discounted value. Okay, so if it is a discounted value, for arriving at a closing value, you have to unwind the discount for 1 year. And what is the unwinding of discount? You have to create an interest cost. Okay, I hope it is clear to everyone. Do we have any other question? No, it is not compulsory for companies to have a planned asset for obligation. I have told you that Bharti Infratel Limited, Bharti Airtel Limited, these are the listed companies, right? And you can see so many companies where only there is a present value of defined benefit obligation is there, the liability is there, the asset will not be there, right? In Reliance, so of course they have funded their gratuity obligation, they are creating a corpus, and hence they are having a this plan asset. It is not mandatory. Medical benefits, how it will be accounted? Of course, if medical benefit is for the short term, so whatever expense the employer is incurring in providing the medical benefits to the employee, for example, in my organization there is an employee health checkup program, and every employee can get some blood test and others, which is, let's say, 10,000 rupees of cost for every employee. So whenever employee will get the service, so employer will recognize a provision or expense for that. I have told you that it is not compulsory for the companies to have a planned asset for obligation. I have told you. If the accumulated leave cannot be encashed, then which value get attached to the provision to be created? In that case, you have to take the total cost to the company. If encashment is there, generally encashment is happening at a basic salary, and generally when the employee will avail the leave, encashment is not there, but availment is there. In that case, of course, it is on the basis of total salary, TCTC to the company. But if the encashment is not there, availment is not there, then nothing is required. No expense, no provision is required. वैभव जी हो गए सारे क्वेश्चन या अभी भी बचे हैं?
सर 4 नंबर क्वेश्चन है सर, 4 नंबर
4 नंबर मैंने अभी आंसर दिया.
ओके, थैंक यू सर.
Okay, welcome. Participants, have you understood the Ind AS 19? What is your feedback? Do you have challenge in any concept? Okay, so let me move to other standard. And Vaibhav ji, please let me know अगर मेरी आपको स्क्रीन दिख रही है तो. Just a minute. वैभव जी, आपको मेरी स्क्रीन दिख रही है?
सर स्क्रीन नहीं दिख रहा आपका सर, अभी आपका जस्ट दिख रहा था, बस हाँ आप अभी दिखा रहे.
Okay.
Slide sir. Okay sir.
Is it clear?
Yes sir.
Yeah. So participants, let's discuss another standard which is Ind AS 24 related party disclosure. And let me tell you, this related party disclosure, so related party, अभी related party ने तहलका मचाया हुआ है. And SEBI, so I'm not only talking about Indian accounting standard, Securities and Exchange Board of India. So they are coming out with a lot of regulations, lot of notifications, circular, and in the last 6 months they have three circulars and notifications on related party compliances, right? So this related party compliances and related party disclosures are very robust and very stringent kind of compliances, even as per the Securities and Exchange Board of India, right? Now the question arises, what is the objective of this standard, related party disclosures, right? This standard is completely disclosure related standard, right? But why related party disclosure is important? The first thing is, if there is a related party, right? So related party has a right to, right is not a correct word, but of course related party is in a position to influence the decision making capacity of the entity, right? For example, if I am a managing director of the company, I can take some decision which could be detrimental for others, right? Classic example, B Limited was an independent entity, right? And B Limited was purchasing some goods and services from C Limited. And there is A Limited also. A Limited has acquired B Limited. And A Limited told B Limited that going forward, you will not purchase any goods or services from C Limited. You will purchase the entire goods and services from me, because I am your holding company, right? I am your holding company. So in this case, what will happen in this case? In this case, due to the presence of related party relationship, due to this holding subsidiary relationship, A Limited is in a position to dominate B Limited, and due to this relationship, there is an impact between B Limited and C Limited. There is an impact, right? So this transaction between B Limited and C Limited is completely closed, right? Completely wiped out. So that there could be the first thing. The second thing, for example, there are two companies, A Limited and B Limited, and B Limited has to take a loan from the bank, and the bank is saying that I can give you a loan only if you will have a turnover of 1000 crores. B Limited is only having a turnover of 900 crores. तो क्या ये 100 करोड़ का टर्नओवर, क्या ये बी लिमिटेड 100 करोड़ के इनवॉइसेस किसी और को रेज कर सकता है अनरिलेटेड पार्टी को? आंसर इज नो. So B Limited has discussed with A Limited, and B Limited has raised invoices to A Limited, because A Limited is a holding company and B Limited knows that कि A Limited को इनवॉइस रेज कर देता हूं, A Limited से पैसा आएगा, नहीं आएगा तो बाद में मैं रिवर्स कर दूंगा, right? It's a group company. There is no risk, there is no exposure. Whatever GST I will pay, my holding company will get a credit, right? Whatever invoice I'll raise, my holding company will get a benefit as an expense, right? So while doing this transaction, जब ये transaction holding और subsidiary के बीच में हो रही है, so they are looking the transaction as a whole. They are just looking this transaction as a group transaction, right? Looking this transaction as a whole, right? So friends, now the question arises, just to see the governance, just to see the independence within the company, just to see whether the arm's length practice is there within the company, it is important to look at the related party disclosures, right? So as an investor, as a user of the financial statement, I will be able to understand, I will be able to know who are the related parties of the company, what are the kind of transactions which are happening with the related parties, and what is the volume of the transaction which is happening with the related parties, what are the nature of the transaction which is happening with the related parties, right? And what are the major terms and conditions with the related parties. So this information can be important for a user of the financial statement. I'll not name the company, but I have seen a listed company where the entire related party transaction is from the group company. The entire turnover, the entire revenue is arisen from the group company. Would you like to invest in that kind of company where the entire revenue is from the group company? Yeah. So the company is not exposed to the entire world. The entire risk, there is a concentration risk, right? There is a concentration risk that the entire revenue is with one related party, and there could be a governance issue as well. If the entire revenue is with one related party, that related party could be in a position to influence this entity for doing this price adjustment and all, right? So friends, the objective of the related party disclosures is more from the governance perspective, more from the independence perspective. It is more from the perspective where one will be able to understand what are the related parties, what are the nature of the related parties, what are the relationship with the related parties, what are the transactions with the related parties, and what are the nature of the transactions with the related parties, right? So the objective of this standard is to ensure that the entity's financial statement contain the disclosure with respect to the related party relationship. Is it a holding company? Is it a subsidiary company? Is it a joint venture company? Is it an associate company? Is it KMP? So these disclosures should be there. Related party transactions, of course, relationship should be there. Related party transactions should be there. What are the related party transactions? Not only transactions, outstanding balances with the related party. So you have to disclose what is my revenue from the related party. You have to disclose what is my outstanding debtors with the related parties, right? Commitment with the related party. Holding company has given a commitment to the bank that if my subsidiary will not pay, I'll pay, right? So even this commitment with the related party is also required to be disclosed, right? The disclosures are necessary so that the user attention could be drawn to the possibility that the financial statement may be affected by such related party relationship and other items mentioned above, right? So the related party is a party who is related, and if who is related, then he can be or it can be in a position to influence the decision making capacity of the entity, right? So this standard this standard shall be applied in identifying related party relationship and transactions. So this standard will tell you who are the related parties, right? So what are the related party relationship and transaction? This standard shall be applied in identifying what are the outstanding balances, including commitments between the entity and its related party. If I'm giving a commitment on behalf of my related parties, so in my related party disclosures and in that entity's related party disclosures, that commitment is required to be disclosed. Identify the circumstances in which disclosure is required, determining the disclosures to be made. So this is the scope of this Ind AS 24. Now the question arises, who could be the related party? A related party is either a person, I mean to say individual who has heartbeat, right? A person, an individual, or a related party could be an entity, X limited, Y limited, XYZ limited, okay? Okay. So either it could be a person or it could be a company or it could be an entity, right? So related party could be a person, could be an entity, and these person or these entity could be a related party with the reporting entity. For example, so before understanding the related party relationship, we understood that either it could be a person or it could be an entity. Let's understand what could be the related party transaction. Related party transaction could be transfer of resources, services, or obligation between a reporting entity and a related party. If one related party is providing a goods or services to other related party, one related party is providing a salary to the KMP of the related party, right? Or if a related party is assuming the obligation of another related party, so these are the related party transactions, right? Example, purchase or sale of goods and services, right? Purchase or sale of property and other assets, rendering or receiving of services, leases. One entity is providing its related party providing the premises on a lease basis to the related party. For example, DLF. So DLF is charging a lease rent from the related parties on the premises on which the DLF has given on the rent, right? Transfer of research and development, it is again a related party transaction. Transfer under license agreement, it is a related party transaction. Settlement of liabilities on behalf of the entity or by the entity on behalf of that related party, right? So settlement of liabilities on behalf of the entity or by the entity on the behalf of the related party is again a related party transaction. These are the examples, right? So related party relationship with the person. So first of all, I have told you that who could be the related party, a person or an entity. We are talking about a person. So which person could be a related party? A person or a close member of that person's family is related to a reporting entity if that person, first of all, you need to see a person. A person is a related party if that person is having a control or joint control over the reporting entity. For example, Mr. A is a person, okay? Mr. A is a person and there is an entity ABC Limited. If Mr. A is having a control, for example, Mr. A hold 51% share of ABC Limited. So Mr. A will have a control. So Mr. A will be a related party of ABC Limited, right? or Mr. A will have a joint control by virtue of an agreement, right? Mr. A will have a joint control, let's say 50% share of ABC Limited, and Mr. A has a joint control. So Mr. A is a related party to ABC Limited. Mr. A has a significant influence, right? Mr. A is having a 20% or more equity stake in ABC Limited. So Mr. A is having a significant influence and Mr. A is a related party. Mr. A is a KMP of ABC Limited. Mr. A is a chairman of ABC Limited. Mr. A is a CFO of ABC Limited. Mr. A is a CEO and managing director of ABC Limited. So Mr. A is a KMP of ABC Limited. So Mr. A is a related party of ABC Limited. So whatever transaction will be happening with Mr. A and ABC, this transaction is going to be disclosed. This transaction is required to be disclosed in the books of ABC Limited. Okay, I hope it is clear to everyone. It is pretty simple. So guys, if Mr. A is a related party of ABC Limited due to these four scenario, then the relative of Mr. A, and in Ind AS the word relative has not been used. In Ind AS the word has been used as a close member of that person's family. The close member of the person's family. Okay, the relative has been used as a close member of the person family. I will use the word relative for the sake of simplicity. If Mr. A will become the related party of ABC Limited, then the relative of Mr. A will also become the related party. Then relative of Mr. A will also become the related party. For example, father of Mr. A is a related. If Mr. A is having a control on ABC Limited, father of Mr. A is also a related party with ABC Limited. Father of Mr. A, in case of a joint control over ABC, father of Mr. A is also a related party. Father of Mr. A in this case is also a related party. Father of Mr. A in this case is also a related party. Sir, are we required to disclose all the related party? For example, Mr. A has, let's say, 15 relative. So do we need to report all the name of the 15 relative? Okay, in the related party disclosure, answer is no. Generally, if the transaction with the relatives are there, then only the name of the relatives and the transaction are required to be disclosed. For example, Mr. A is a CFO of the company, Mr. A is a related party of the company, and are no any transaction with the relative of Mr. A with this company. In that case, nothing is required to be disclosed. Right? Clear? Clear? Okay. Yeah. Now, what is the definition of close member of the close members and KMP? Close member of the family. So close member includes father, mother. Okay, father, mother, brother, sister. So mother and father are covered. Brother and sister are covered. Brother, sister, mother, father. A spouse. So person's spouse. For a lady, husband is there. For a husband, wife is there. Right. So person's spouse or domestic partner, because these Ind AS are governed from the global standard, and global standards were having a Western culture also. So there is a concept of domestic partner also, right? So apart from spouse, if a person is living into a living relationship, okay, if there is a domestic partner, so that domestic partner is also covered as a relative, close member of the family, because that domestic partner can influence a person, right? So mother, father, sister, brother, spouse, and children of the spouse. Okay, children of that person or the person's spouse, right? So children of husband as well as children of wife, spouse is covered under a close member of the family. Okay, dependent of that person or that person's spouse. Okay, if there are dependent of such person or dependent of person's spouse, for example, wife's mother and father are dependent on the wife, right? Dependent of that person or that person's spouse. So if your father-in-law and mother-in-law are dependent on your wife, then your father-in-law and mother-in-law is also covered as a relative from the purview of Ind AS 24. Who is considered as a key managerial personnel? So person having authority and responsibility for planning, directing, and controlling the activities of the entity directly or indirectly. For example, managing director and CEO, including any director, whether executive or otherwise. So in this case, executive director and non-executive directors are also covered. If the sitting fees is payable to executive and non-executive director, it is required to be disclosed in the related party disclosure, right? So KMPs are the person who have authority and responsibility for planning, directing, and controlling the activities of the entity. For example, CFO, MD, CEO of the company, right? So we have understood the meaning of relative, KMP, and the meaning of the person. I mean to say which person could be related party. So we have identified 4 situations: control, joint control, significant influence, KMP. And when these person become a related party, the relative of such person are also become a related, right? So let's discuss now the related party relationship with the entity. So as far as the entity is concerned, so it will be a related party. Both are member of the same group. What does it mean? Parent, sorry. So there is a parent, there is a subsidiary, there is a fellow subsidiaries. Okay. So in this case, the entire group is related to each other. For example, there is a parent A Limited and subsidiary is B Limited, and the C Limited, D Limited, G Limited is also subsidiary. So every entity is related to each other. All are considered as a member of the same group. So parent, subsidiary, and fellow subsidiary is related to each other, right? So in the related party disclosure of each company, the name of other companies, if the transactions are there, it has to be disclosed. So for a parent subsidiary, even though transactions are not there, it is required to be disclosed. If the subsidiary will make a disclosure, so subsidiary will always make a disclosure of parent even though transactions are not there. अगर ट्रांजेक्शन नहीं भी है तो पेरेंट को सब्सिडरी का और सब्सिडरी को पेरेंट का डिस्क्लोजर करना है. बट अगर फेलो सब्सिडरी के साथ ट्रांजेक्शन है तो फेलो सब्सिडरी भी इस सब्सिडरी के लिए कजन्स, फेलो सब्सिडरी मींस कजन्स, राइट? कजन्स और लेट्स से सिबलिंग. सो फेलो सब्सिडरी भी इस सब्सिडरी के लिए फेलो सब्सिडरी भी का भी डिस्क्लोजर होगा अगर ट्रांजेक्शन है तो, because these are considered as an entity of the same group, right? Is it clear? So parent, subsidiary and fellow subsidiary is related to the others. अगर इस fellow subsidiary की कोई subsidiary है तो भी ये सारे आपस में related party होंगे. Second, one is an associate or joint venture of the other, or an associate or JV of a member of a group of which the other entity is a member. For example, X Limited is a reporting entity. X Limited is a reporting entity. So X Limited के का आप बैलेंस शीट बना रहे हो, X Limited का डिस्क्लोजर कर रहे हो, तो X और Y रिलेटेड पार्टी होंगे. X और Y रिलेटेड पार्टी कब होंगे? If Y is an associate or JV of X, if Y is an associate or JV of X, मतलब इस X का अगर एसोसिएट या कोई JV है, ऑफ कोर्स अगर मेरा कोई JV या एसोसिएट होगा वो भी रिलेटेड पार्टी होगा, राइट? मेरा कोई JV या एसोसिएट नहीं है, लेकिन मेरे पेरेंट का अगर कोई जेवी और एसोसिएट है वो भी रिलेटेड पार्टी होगी. मेरी फेलो सब्सिडरी का अगर कोई जेवी और एसोसिएट है वो भी रिलेटेड पार्टी होगी. हैव यू अंडरस्टूड? सो इफ एक्स लिमिटेड इज अ रिपोर्टिंग एंटिटी एंड वाई लिमिटेड इज अनदर एंटिटी, सो अगर वाई एक्स का खुद का ही एसोसिएट है, जॉइंट वेंचर है, फिर तो रिलेटेड पार्टी होगा ही होगा. लेकिन अगर वाई एसोसिएट है, जॉइंट वेंचर है एक्स के ग्रुप का मतलब इधर एक्स के पेरेंट का और एक्स की फेलो सब्सिडरी का, तो भी वो एक्स का रिलेटेड पार्टी होगा. आई होप इट इज क्लियर टू एवरीवन गाइस. आई होप इट इज क्लियर टू एवरीवन, राइट? इज इट क्लियर? सो लेट मी डिस्कस दिस with okay. So Y is an associate or JV of X who is a reporting entity, and even this Y is an associate or JV of parent of X or fellow subsidiary of X, तो भी क्या होगा? related party होगा, right? Third, both are joint venture of the same third party. Both are joint venture of the same third party. So reporting entity, यहाँ पर X is a JV of Z, Y is a JV of Z, so X and Y will be the related party. The classic example, Vodafone Idea Limited is the joint venture of Vodafone Group PLC UK, and Indus Tower Limited is also a joint venture of Vodafone Group PLC. So Indus Tower Limited and Vodafone Idea are the related parties. right? Why? Because these two entities are the joint venture of the same entity. So this is the entity and the two entities are joint venture, right? So if these two entities are joint venture, so of course this joint venture and venturer are of course a related party. But if these two entities are the joint venture of the same entity, then these two entities are also a related party. So in this example, of course, for X, Y is a related party. For Y, X is a related party, right? Clear? Fourth example, one entity is JV of third party and other entity is an associate of the third party. So X is a JV of Z. In this case, X is a JV of Z, right? X is a joint venture of Z and Y is an associate of Z. So X is a JV of Z, Y is an associate of Z. So both are joint venture and associate of the third party, right? So in this case, X and Y are the related party. But if both the entities are associate of the same third party, then it is not a related party. Okay, if X is an associate of Z, Y is an associate of Z, then these are not a related party. Okay, but if X is a JV of Z and Y is an associate of Z, then X and Y are the related parties. Okay. Fifth one, the entity is controlled or jointly controlled by a person identified earlier. The entity is controlled or jointly controlled by a person identified earlier. Yeah. For example, X is an entity. X is an entity and it is controlled by Mr. A. X is an entity and it is controlled by Mr. A. So Mr. A is controlling X Limited, right? And same Mr. A is also controlling or jointly controlling entity Y. So Mr. A यहाँ पर क्या कर रहे हैं? Mr. A का कंट्रोल और जॉइंट कंट्रोल, मिस्टर ए का कंट्रोल है यहाँ पर, लेट्स से मिस्टर ए का कंट्रोल है एक्स लिमिटेड में और मिस्टर ए का कंट्रोल या जॉइंट कंट्रोल है वाई लिमिटेड में. तो यहाँ पर क्या होगा? यहाँ पर मिस्टर ए तो ऑफ कोर्स रिलेटेड पार्टी है बिकॉज मिस्टर ए का कंट्रोल है या जॉइंट कंट्रोल है. सो मिस्टर ए इज अ रिलेटेड पार्टी ऑफ एक्स, मिस्टर ए इज अ रिलेटेड पार्टी ऑफ वाई, बट हियर दिस एक्स एंड वाई आर ऑल्सो अ रिलेटेड पार्टी. अगर सेम ही बंदे का कंट्रोल है एक कंपनी में और उसी बंदे का कंट्रोल या जॉइंट कंट्रोल दूसरी कंपनी में है, तो वो दोनों कंपनियां भी आपस में रिलेटेड पार्टी होंगी. क्यों? क्योंकि ये बंदा उन दोनों कंपनी को इन्फ्लुएंस कर सकता है. राइट? अंडरस्टूड? इज इट क्लियर? इज इट क्लियर? नेक्स्ट, अ पर्सन हु इज हैविंग कंट्रोल और जॉइंट कंट्रोल. एक पर्सन का कंट्रोल है या जॉइंट कंट्रोल, has significant influence over the entity. A person who is having a control or joint control of the entity has a significant influence over the entity or is a member of the KMP of the entity or of its parent. For example, X Limited एक रिपोर्टिंग एंटिटी है और X और Y रिलेटेड पार्टी होंगे कब? अगर मिस्टर ए कंट्रोल करते हैं X को और मिस्टर ए का सिग्निफिकेंट इन्फ्लुएंस है Y में. फॉर एग्जाम्पल, Mr. A controls X Limited. Mr. A is a KMP of Y Limited. So Mr. A का कंट्रोल X में है और Mr. A KMP है Y Limited के. So in this case, X and Y are related parties. Mr. A controls X Limited and Mr. A is having significant influence on Y Limited. In this case, again, X and Y are related parties. Right? Last one, the entity or any member of a group of which it is a part provides KMP services to the reporting entity or to the parent of the reporting entity. The entity, एक entity or any member of a group of which it is a part. अगर एक entity मतलब उसकी parent, उसकी subsidiary, उसकी fellow subsidiary, ये पूरा एक group बन गया. The entity or any member of a group, entity और कोई भी member of the group, group का मतलब parent, subsidiary, fellow subsidiary, provides, ये entity provide कर रही है या इस entity की group का कोई भी member provide कर रहा है KMP services to the reporting entity or to the parent of the reporting entity, तो भी ये related party होगा. For example, Y Limited is the reporting entity, X Limited is the parent of Y Limited, right? So Y Limited क्या है? Y Limited is the reporting entity and X Limited is the parent of Y Limited. So X and Y are the related party क्योंकि parent subsidiary, holding subsidiary है. Z Limited will be the related party of Y Limited. Z Limited इस Y Limited की related party होगी अगर Z provides KMP services to either X or Y. X और Y आपस में क्या है? X and Y are the member of the same group. Why? Because X is a holding company, Y is a subsidiary company, and there is a third party Z. And ये जो Z है, Z भी related party होगा Y का, Y reporting entity, X का भी होगा, Y का भी होगा. Okay. So Z will be the related party of Y Limited अगर Z KMP services provide करता है या तो X को या Y को, या Z के ग्रुप का कोई भी मेंबर KMP सर्विस प्रोवाइड करता है X को या Y को, या Z की कोई भी पेरेंट या फेलो सब्सिडरी KMP सर्विस प्रोवाइड करती है X को और Y को. तो ये जो थर्ड पार्टी Z है, Z रिलेटेड पार्टी होगी Y की कब? अगर Z खुद KMP सर्विस प्रोवाइड करता है X को और Y को, या Z के ग्रुप का कोई भी मेंबर, Z का पेरेंट, Z की सब्सिडरी, Z की फेलो सब्सिडरी अगर X या Y को कोई भी KMP सर्विस प्रोवाइड करती है तो Z इनकी रिलेटेड पार्टी होगा, राइट? सो अगेन रीड दिस पैराग्राफ. द एंटिटी और एनी मेंबर ऑफ अ ग्रुप ऑफ विच इट इज अ पार्ट provides KMP services to the reporting entity or parent of the reporting entity. For example, X Limited is a parent of Y Limited. Y Limited and Z Limited are related parties if either Z Limited or any group member of Z Limited provide KMP service to either X or Y. I hope it is clear to everyone, friends. Yeah. Okay. Now there are some important things which are needs to be kept in mind. Associate includes subsidiary of associate, and joint venture includes subsidiary of joint venture. For example, X Limited is an associate of Y Limited and Z is a subsidiary of X Limited. So in this case, in associate, the subsidiaries of associates will be covered, and in joint venture, subsidiaries of joint venture are also covered. Okay. So if this associate and joint venture are related party, then their subsidiaries are also become a related party. Okay. And for evaluating the related party relationship, the substance needs to be checked. Legal form is only not required to be checked. For example, X is having a 50% stake in Y Limited, and by way of contractual right, by way of a contract between the shareholder, X is not having any right in the Y Limited. In that case, although you can say that X is having a 55%, 60% or 50% rights, but by way of a contract, his rights are no more. Okay. So going by the substance, X is not a related party. X, you cannot say that X is controlling Y Limited, right? The following are not considered as a related party. Two entities, if they have a director or other member of KMP in common. You must have seen that the independent directors are on the board of 15 companies, 20 companies. For example, a single director is on the board of Reliance Industries and on the board of Bharti Airtel. So Bharti Airtel and Reliance Industries cannot be a related party, right? A member of KMP of one entity has significant influence over the another entity. So a person who is a KMP in one entity and a person who is having a 20% stake, significant influence in another entity, so he cannot be a related party, right? Two venturers having joint control over a joint venture, for example, Vodafone Group and Bharti Airtel, so they have invested in Indus Tower Limited. So just sake of, because both have invested in one entity, so it does not mean if they have a common joint venture, they both Vodafone Group and Bharti Airtel will become a related party. It will not be like that, right? Provider of finance, trade union, public utilities, department. So these are considered as a related party. Sorry, these are not considered as a related party. Customer, supplier, franchisor. So I have a largest customer. That largest customer will not be considered as a related parties, right? This largest customer will not be considered as a related parties. Understood? Coming to the disclosure requirement. So in case of a parent subsidiary relationship, it is required to be disclosed, even though the transaction will not be there, still name of the parent is required, name of the ultimate parent is required, I mean to say grandfather, right? And relationship is required, even though the transaction is not. In case of key managerial personnel, the disclosure is required for the compensation of short-term employee benefits, post-employment benefits, other long-term benefits, termination benefits, and share-based payment, right? So this is required. Clear? Related party transaction. So what is required to be disclosed? Amount of the transaction is required to be disclosed, and the outstanding balance is required to be disclosed. For example, a company has sold a goods to its related party, so the revenue from operation is required to be disclosed in the books of the seller, and outstanding debtor is also required to be disclosed. If there are any commitment, it is also required to be disclosed. Their terms and conditions, including if, for example, a company has given a loan to the another related party. So if it is secured, unsecured, what are the nature, what are the commitments, guarantees? So these all are required to be disclosed. If there is a provision for bad debt, if there is a bad debt of a related party, that bad debt is also required to be disclosed. Okay. So the transaction with parent, the transaction with joint venture, the transaction with associates, okay, the transaction with KMP and other related parties are separately required to be disclosed. Okay. And so the transaction with the related party has to be on an arm's length basis, and this disclosure is required. Okay. Coming to the comparison between Ind AS and accounting standard. So under accounting standard, it is AS 18. The definition of relative is different between AS 18 and Ind AS 24, right? Under AS, the concept of domestic partner is not there, right? But under Ind AS, the concept of domestic partner is there, and the word used is close member of the family of a person. Under accounting standard, the related party only covers KMP of the entity, but under Ind AS, the KMP of the parent is also related party of the entity. Okay, if I am an entity, for example, X Limited, so my KMPs are my related party, and my parents' KMPs are also my related parties. Okay, so my KMPs as well as my parents' KMP is my related party. Okay, post-employment benefits, right? So Ind AS 24 is specifically include post-employment benefit plan. For example, Infosys has created a Provident Fund trust, so it is a related party. But AS 18 does not specifically cover any post-employment benefit plan, right? So next most senior parent, under Indian accounting standard, for example, Ind AS 24 requires an additional disclosure as to the name of the next most senior parent which produces consolidated financial statement for public use. For example, my parent is not preparing the consolidated financial statement. So who will be the next parent who will prepare the consolidated financial statement? It is required to be disclosed. But AS 18 does not have such requirement, right? AS 18 does not have such requirement. These are the disclosure of Tata Steel Limited for your ready reference. Like they have given a transaction, sale of goods, services, okay, received, rendered, interest income recognized, expense recognized, dividend paid, dividend received, provision recognized, your management contract, sale of investments, then finance provided, this is outstanding balances, provision, outstanding payable, guarantees, sale of fixed assets, right? And this important information is also there. And they have also given a disclosure of significant investment in subsidiaries, associate and joint venture, right? That what is the stake, what is the relationship, subsidiary companies, country of incorporation, and their percentage holding. So they have given these kind of disclosures, right? So just concluding, it was a very small standard. So this standard talks about who are the related parties, who could be the related parties, and what are sort of disclosures which is required for the related parties, right? So thank you so much, friends, and So I'm done with Ind AS 24. Mr. Vaibhav, let me know if the participants have any query on the related party standard.
हेलो, हाँ बोलो। हाँ
Hello, am I audible?
हाँ सर बोलिए।
Hello.
हाँ सर दे रहा, क्वेश्चन दे रहा सर।
If there are, so my second standard has been completed. So if there are any queries of the participant, please let me know. कोई participant का query है तो बता दीजिए।
Yes sir.
If X Limited and Y Limited form 50-50 joint venture, Z Limited, then X as reporting entity should report Y Limited as a related party. Yes. So in that case, if X is a reporting entity, then Z Limited is a joint venture of X Limited. So X Limited will disclose that Z is my joint venture, right? So X Limited and Z Limited are related parties. Y Limited and Z Limited are related parties, but X and Y are not related parties just due to the fact that they have a common joint venture. Okay. So X as reporting entity should report Y as related party. Answer is no. If two person has formed a joint venture, these two person will not be related party just due to the sake that they have a common joint venture, right? Who is ultimately held accountable, responsible to correctly report the related party transaction? Related party himself, or operating level management of the related party, or the auditor? So friends, very classic question. Related party disclosure and related party compliances are the responsibility of the management, right? For example, X Limited is a company. So management of the X Limited is responsible for the related party disclosure and compliances. If you have read that, the responsibility of management is having a responsibility of preparing the financial statement. Okay, so preparation of financial statement is the responsibility of the management. Auditor responsibility is to provide the opinion on those financial statement, whether it is true and fair or not, right? And related party disclosure are part of the notes to the accounts to the financial statement. So it is a management responsibility of the related party, of the reporting entity. Okay, do we need to disclose all as related party which are fellow subsidiary of holding? Answer is no. I have told you, if there are 100 fellow subsidiaries, so you are required to disclose only those fellow subsidiary with whom you have a transaction, and you can write that name of the fellow subsidiary with whom the company has a transaction or outstanding balances, who all are covered in KMP. The definition of the KMP is very wide. Technically speaking, under key managerial personnel, CEO or managing director, executive or non-executive directors, chairman, CFO, and company secretary will be covered under key managerial personnel. Do we have any other question, Mr. Weber? Do we have any other question? I have covered all the question. If the related party relationship is no more in existence on the reporting date, whether the disclosures are required? Yes. You have to give the disclosure. For example, there was a subsidiary, and that subsidiary was still in the financial year till 31st December, there was a subsidiary. So you have to write the name of the subsidiary, and you have to write that ceased to be a subsidiary with effect from 1st January. And whatever transaction was incurred in the capacity as a subsidiary for those 9 months is required to be disclosed. What can be the audit procedure for related party transaction as per Ind AS? So as per Ind AS, there are no audit procedure. Ind AS are the accounting standard. Ind AS are not auditing standard. So you have to go with the auditing standard to see the what could be the audit procedures. But if I can tell you, of course, the first thing is you have to take a related party list from the entity, that who are your who is your holding company, who are your ultimate parent, right? Who are your which companies are your subsidiary company, joint venture, associate, KMPs, their relatives. So I think you need to take the list of the related party from the company secretary or from the secretary department of the company. Okay, and then you need to see what are the transactions with these related party, and then you need to see whether the transaction has been appropriately disclosed or not. वैभव जी, मैंने सारे क्वेश्चन कवर कर लिए हैं. और कोई क्वेश्चन है अभी?
नहीं सर.
Okay. So guys, I'll take a break for 2 minutes, and then I'll start the third standard. Just give me 2 minutes break. Please confirm if my PPT is visible, guys. Please confirm. Am
नहीं
I
सर.
audible? My PPT is.
यस सर, यस सर. सर पीपीटी शेयर करिए आपका वापस से.
हाँ, अभी ठीक है. हेलो,
नहीं सर, अभी तक आया नहीं सर.
अभी आया? Just a minute.
हाँ अभी आया सर.
Yeah. So friends, the third agenda of the day is Ind AS 108 operating segments, and this is again a very small standard and disclosure related standard. So why this standard is important? So let's understand. Because the company has a different segments, right? For example, if I talk about Tata Group, so you must have been heard about Tata Motors. Tata Motors is into automobile, right? You must have heard about Tanishq into jewelry. So Tanishq is a Tata brand. You must have heard about Taj Hotels. Again, it is a Tata brand, right? So you must have heard about Tata Tea, right? So FMCG. So Tata is into automobile. Tata is into FMCG. Tata is into jewelry. You must have heard about Titan. So Titan is what? Titan is what? Titan is again a watches brand, right? So Tata is into watches as well, right? Tata is into FMCG, right? Tata is into steel, right? So Tata Steel Limited. So friends, if I talk about these conglomerate, right? So I have invested in Tata Group, for example. I have invested in these companies, or let's say as a consolidated, Tata Sons is a consolidated company. It's a ultimate parent company. Or if I have a different kind of segment where I'm operating. So as a user of the financial statement, I need to see which segment is an important segment, which segment is a profitable segment, which is not a profitable segment. I'll take a classic example of this. When this lockdown was happened in March 2020, so in the first quarter, and I will say that in April 20 or May 20, the sale of car was zero, right? Sale of car was zero. But since the lockdown was happened, so as far as FMCG is concerned, so everyone was storing some, groceries, right? So at that point of time, if I talk about watches, if talk about jewelry, if I talk about automobiles, so that segment was not performing, but this FMCG segment was performing. So as an investor, as a user of the financial statement, what I will understand, okay, so when I will look at the operating segments, when I will be looking at the segment wise disclosure, I would be able to understand which segment is a high performing segment, which segment is low performing segment, which segment is giving a profit, which segment is not giving a profit, and what is the quantum of profit, right? So the objective of this standard is that an entity shall disclose information to enable user of the financial statement to evaluate the nature and financial effect of the type of the business activities. So I will understand what are the type of the business activities in which it engage and the economic environment in which it operates. Okay, so what are the economic environment in which it operates? Because while doing the operating segment wise reporting, I have to give the reporting on a geographical basis as well. What is within India, what is out of India, right? So I have to look at those impacts also. So the nature and financial effect of the type of the business activities, as well as the nature and effect of the economic environment. If I talk about Reliance, so Reliance is into textile, Reliance is into oil and gas, Reliance is into retail, Reliance is into various segments. So as a user of the financial statement, I need to understand, since these conglomerate, so which segment is a beneficial segment, what is the financial effect of these segments. So this is an important information for an investor or user of the financial statement, and this Ind AS 108 facilitates such kind of disclosures, right? Coming to the scope part, this standard shall apply to companies to which Ind AS notified under the Companies Act apply. Of course, this standard is applicable only to companies where Ind AS is applicable, right? If an entity that is not required to apply this Ind AS chooses to disclose information about segment that does not comply with this Ind AS, it shall not describe the information as a segment information, right? So a company who is not required to apply Ind AS and the company is providing segment information, so company cannot say that this segment information is as per Ind AS 108. If a company like Reliance is giving its standalone financial statement as well as consolidated financial statement, in that case the segment information is only required in the consolidated financial statement. So your homework is download the annual report of Reliance Industries Limited for 2021. You will find that the segment disclosure is not there in standalone financial statement. It is only there in consolidated financial statement, right? So friends, just for the sake of simplicity, I will bifurcate this standard into 4 steps. I will complete this standard into the 4 steps, right? What are the 4 steps? Step number 1 is identify chief operating decision maker. This is a new concept. Ind AS 108 says that before identifying the segment, you need to identify the chief operating decision makers. Who is the CODM? Then you need to identify which are the operating segment. I'm not saying disclosure. I am saying which could be the segment. Once you identify chief operating decision maker, once you have identified the operating segment, then you need to identify out of this 10 operating segment, what is my reportable segment. And this reportable segment has to be identified on the basis of some threshold criteria, which is there under accounting standard 17 also, right? on the basis of threshold criteria. You have to determine the reportable segment on the basis of threshold criteria, right? First CODM, then operating segment, then reportable segment. And once you have identified, okay, out of 10 operating segment, these are my 5 reportable segment, you need to make the disclosure about the reportable segment, right? So these are the 4 steps. Let's discuss one by one. First of all, before identifying the operating segment component, we need to identify what is the component of the entity. So what could be the operating segments? The operating segment are the component of the entity. Which component? First of all, you need to see the component. A component of an entity that engages in business activities from which it may earn revenue and on which it may earn revenue and incur expenses. Okay, earn revenue and incur expenses. Guys, please mind my word may. So what could be the component? A component is a component of an entity which is engages in the business activity from which it may earn revenue and incur expenses. Whose operating results are reviewed regularly by the organization's chief operating decision maker to make decision about resources to be allocated to the segment and assess its performance, and for which discrete means different, separate, for which separate financial information is available. Let me summarize. For example, Tata Group has 5 segments. Tata Group has Tata Motors, Tata Steel, Titan, Tanishq, okay, Tata Tea. These have 5 segments. Tell me whether these 5 segments, I mean to say whether these 5 verticals can be considered as a component. Whether these are business activities, answer is yes, it is a business activity. Whether it may earn revenue and incur expenses, yes, it may earn revenue and incur expenses, of course, yes, right? If the company has a research and development division, if a company is research and development vertical, whether it can be considered as a component, answer is no. Why? R&D department of the company may incur expenses, but it may not earn revenue, and hence R&D department is not a component, right? But yes, in Tata, these verticals are a component. Why? Because these are the business activities from which it may earn revenue and incur expenses. Second, whose operating results of Tata Steel, Tata Motors, Tanishq, Titan, Tata Tea, FMCG business, are reviewed regularly by the organization's chief operating decision maker. Who is the chief operating decision maker? Chief operating decision maker is that guy or that authority who is taking the decision about the resources to be allocated to the segment and assess its performance. For example, the company has a 5 component from which it may earn revenue and incur expenses. Now company has to infuse 1000 crore into the expansion. So of course, this chief operating decision maker, who could be the CEO of the company, who could be the MD of the company, chairman of the company, or let's say committee of directors, right, who will take a decision that this 1000 crore has to be invested in which component. तो कैसे पता लगेगा? उस हर एक component की performance assess करेंगे, right? For example, 1000 करोड़ का revenue है but loss making है, मेरा दूसरा component है 500 करोड़ का revenue और 100 करोड़ का profit है, so it means उसमें potential ज्यादा है. अगर उसमें expansion किया जाए, अगर उसमें capital pump की जाए, तो this group will have a more profit, right? So the first condition is that component should be a business activity which may earn revenue and incur expenses, whose operating results are regularly reviewed by CODM, chief operating decision maker, for taking a decision about resource allocation and performance assessment, and for which separate financial information is available. Balance sheet is available, P&L is available, cash flow is available, right? An operating segment may engage in business activities for which it is yet to earn revenue. For example, startup. For example, a company is investing funds into a startup which is a vertical, and the startup has not started earning revenue, and only expense has been incurred in that startup. So guys, although the revenue has not been started, but it has a potential to earn revenue, right? It may earn revenue, and hence a startup could be a component. right, for the entity. Now, question number 1, is a segment balance sheet necessary to conclude that discrete financial information is available? No, because from the balance sheet you cannot identify. So in most of the cases, profit and loss and cash flow are the important information which is important for assessing the performance of the segment. No, in many cases the requirement for discrete financial information can be met with the operating performance information only, like revenue, gross profit by product line, right? So P&L is important, only balance sheet. If only balance sheet is there, you cannot say that separate financial information is available. Who is CODM, Chief Operating Decision Maker? CODM could be a person, it could be a function, and that function is to allocate resources and assess the performance of the operating segment of the entity. Generally, Chief Executive Officer, Chief Operating Officer are the CODM, but it may be a group of executive directors also. It may be a single person, it may be a group of person, right? Generally, it is a higher authority, right? Executive Committee of Company A comprises of CEO, Co, and President. Committee assess performance and makes resource allocation decisions. Each committee member has a single vote. Tell me who is the CODM of Company A, whether Executive Committee, CEO, Co, or a President. So there is an Executive Committee of Company A, which includes CEO, Co, and President. And the committee is assessing performance and make resource allocation decisions. And each committee member has a single vote, right? So tell me, who is the chief operating decision maker of the company A? Is it executive committee? Is it CEO? Is it Co? Is it president? Who is the CODM? So in this case, of course, CODM is the executive committee, okay, because this is the committee who is assessing the performance and who is making a resource allocation decisions. So executive committee is CODM here, right? Is the CODM always viewed as the highest level of management at which the decisions are made? Tell me. Answer is yes. Normally, chief operating decision maker is normally the highest level of management, like CEO, managing director, Co, or a group of committee, or a group of people forming a committee. Does a component meet the definition of segment if the CODM reviews revenue only information? Tell me. So CODM is only looking at the revenue. Now I'll ask one question with you. There are three components. One component is 1000 crore turnover, second one is 2000, third one is 3000. And you are a CODM and you are only looking at these three information. Will you be able to take a decision for the resource allocation, or will you be able to assess the performance? Answer is of course no. Tell me, this 1000 crore revenue line company, top line company or top line component is earning a profit of 100 crores. This 2000 top line is earning a profit of 50 crores, and 3000 top line company or vertical is having a loss of 200 crores. So how can you say that only by looking at the revenue information? How can you say that, okay, my C component is a best component? You cannot see that. Although the top line is 3000 crore, but it is incurring a loss of 200 crores. And the first component, which is having only 1000 crore of revenue, is having a profit of 100 crores, right? So while looking at the revenue, cost, EBITDA, or a profit, you can assess the performance of the component. So only revenue information is not the sufficient information. So guys, first of all, I have talked about two things. One is operating segment, identification of operating segment. So what could be the operating segment? It is a vertical, or it is a business activity which may earn revenue or incur expenses, and whose performance is assessed by a chief operating decision maker, and CODM is taking a decision for the resource allocation and assessing the information as well. And for that component, separate information is available. Who is the CODM? It is highest level of management who is taking a decision and who is regularly assessing the performance, right? So we have covered two steps: identification of CODM and identification of operating segment, right? Now the third statement is, if the company has a different product or services, different product line, different services, so can the company has to disclose the information for all the product line or services, or the company can apply some aggregation criteria. So the standard has given some aggregation criteria for clubbing of operating segments. So two or more operating segment may be aggregated into a single operating segment if they have similar economic characteristics and they are similar in each of the following aspects. For example, the nature of product and services. For example, the company is having a different three kind of shampoos, soaps and shampoos, right? So the nature of the product and services are same, right? So these are the toiletries, or these are the products which have been used in the bathing, right? Used in bath. So nature of the production process, is it a capital intensive? Is it a labor intensive? Okay, so two or more operating segment can be combined or clubbed on the basis of the nature of the production processes as well. The type or class of the customer for their product and services, right? For example, there was a time this Mercedes car is only available for high net worth individuals. So who are the type of class or customer for those product and services? On that basis, even two or more operating segment can be clubbed. The method used to distribute the product or provide their services. If applicable, the nature of the regulatory environment, right? For example, these products require some approvals of the government, right? So these are the five conditions where you need to see if two or more operating segments are having a similar economic characteristics and similar in these five aspects, each of the five aspects, then you can aggregate two or more operating segment. And we have a real life example of Hindustan Unilever Limited. If you read the annual report of Hindustan Unilever Limited, they are aggregating the business segment and making a disclosure. And see what are the disclosure. The group has determined the following reporting segment based on the information reviewed by the CODM, Chief Operating Decision Maker. Home care, so they have covered home care includes detergent bars, detergent powders, detergent liquids, scourers, water businesses, purifier businesses, etc. Beauty and personal care include product in the categories of oral care, skin care, soaps, hair care, deodorants, talcum powder, color cosmetics, salon services. So all these items have been covered in the segment of beauty and personal care. Food and refreshment include branded staples like atta, salt, bread. Culinary products like tomato-based product, fruit-based product, jams, tea, coffee, ice cream, desserts. Others include exports, infant care product, etc. So they have aggregated these different product lines into a four business segments, right? So they have combined multiple operating segments into a single operating segment. Aggregation has been done following the aggregation criteria as per Ind AS 108. And what is the aggregation criteria? The aggregation criteria is what is the aggregation criteria? This is the aggregation criteria. Similar economic characteristics should be there, right? Similar economic characteristics and similar on the basis of these five aspects, right? So guys, we have discussed identification of CODM and identification of operating segment. Now the third step is, so we have identified multiple operating segments. Now we have to see which are the reporting segment, right? So standard says that the reporting segment has to be identified on the basis of threshold criteria. The first criteria is revenue. If any operating segment, right, is having a revenue of 10% or more, for example, the total revenue of all operating segment, internal plus external, the total revenue of all operating segment is 100 rupees. It is 100 rupees. So any operating segment which is having a revenue of 10 or more, having a revenue of 10 or more is considered as a reporting segment, right? Assets. So first I'll go with the asset. Okay, if any operating segment, for example, the value of the asset is 150, if any operating segment is having an asset size of 15 or more, will be a reportable segment, right? Now coming to the results. So if any operating segment is having 10% or more of the profit or loss of all the operating segment. So ये नहीं समझ में आया sir. Okay, let me tell you. For example, there are 6 operating segment, right? So 3 operating segment is having a profit of 100, 200, 900, which is 1200, right? There are 5 operating segment. The last 2 operating segment are having a losses 100 and 200, so which is 300, right? So which is greater, whether 1200 is greater or 300 is greater? Of course the greater number is 1200. I am saying in 1200 और 300 में कौन बड़ा है? 1200 बड़ा है, of course. So standard says that first of all you have to combine all the operating segments which are into profit, and you have to see the total of the only profit. Then you have to combine all the operating segment which is having a losses, and then you have to combine the losses. 300, right? So now you need to see which is greater. For example, 1200 is greater. So in that case you have to see any operating segment which is having a profit or loss, of 10% or more. So any operating segment which is having a profit or loss 120 or more will be a reportable segment. Okay, sir, whether all these 3 criteria has to be satisfied? No, it meet any of the following criteria: either revenue, either profit or loss, or either assets, right? Okay, now there are some guidance also given. For example, whatever operating segments you are converting into the reportable segment, whatever operating segment you are converted into a reportable segment. जैसे मेरे 10 सेगमेंट थे, 10 सेगमेंट का टोटल रेवेन्यू था मेरा 1000 करोड़ का, लेकिन मेरे जो रिपोर्टेबल सेगमेंट निकल कर आए वो सिर्फ 5 निकल कर आए और उसका रेवेन्यू सिर्फ 600 करोड़ का है. तो स्टैंडर्ड कहता है एटलीस्ट आपको उतने ऑपरेटिंग सेगमेंट में से रिपोर्टेबल सेगमेंट निकालने हैं जिससे आपका कम से कम 75% ऑफ द एंटिटी का रेवेन्यू डिस्क्लोज हो जाए. मतलब मेरे जो 5 ऑपरेटिंग सेगमेंट से रिपोर्टेबल सेगमेंट आए हैं उसका रेवेन्यू सिर्फ 600 करोड़ है, टोटल रेवेन्यू 1000 करोड़ है. मुझे ऐसा ऑपरेटिंग सेगमेंट देखना पड़ेगा या ऐसे एक से ज्यादा ऑपरेटिंग सेगमेंट देखने पड़ेंगे जो कम से कम 150 करोड़ का रेवेन्यू कवर करते हों. So management may report additional operating segment that do not meet any of the quantitative thresholds if the said information would be useful for the user of the financial statement. So the first criteria is after the quantitative threshold, you need to see at least 75% of the revenue should be reported in the form of operating segments, right? And management may report additional operating segment, okay, even though which is not meeting any quantitative threshold. But if management feels that such operating segment is very important to disclose, okay, so management is required to disclose those operating segments. And for other operating segment which is not reportable, management may combine all the other reportable segment and management can just put one column all other segment so that the total will be tally with the balance sheet or total will be tally with the P&L, okay, right? So if an operating segment was identified as a reportable segment in the last year and it is still important, कोई मेरा operating segment last year में reportable segment था but इस बार नहीं बना, क्यों नहीं बना? क्योंकि मेरे एसेट में, रेवेन्यू में और रिजल्ट की क्राइटेरिया में नहीं आया, बट वो इंपॉर्टेंट है. सो इन दैट केस लास्ट ईयर का जो था आपका थ्रेशोल्ड क्राइटेरिया में आ गया था रिपोर्टेबल सेगमेंट, इस बार नहीं आया, सो एंटिटी को उसको करंट ईयर में भी रिपोर्ट करना पड़ेगा इवन दो वो थ्रेशोल्ड क्राइटेरिया में नहीं आया, राइट? क्लियर? इज इट क्लियर? सो व्हेन अप्लाइंग 75% टेस्ट, should the next largest segment be always selected? Answer is no. आपको next largest नहीं लेना, next most meaningful लेना जो मैनेजमेंट के हिसाब से इंपॉर्टेंट हो. Is aggregation must if 2 or more segment meet the aggregation criteria? Answer is no. Aggregation into a reportable segment, single segment is permitted but it is not compulsory. अगर हिंदुस्तान यूनिलीवर चाहती तो 15 सेगमेंट दिखा सकती थी, एग्रीगेट नहीं करती तो भी चलता, लेकिन उन्होंने एग्रीगेट किया so that the information should not be a huge, so that the user will be able to understand the information, right? So quickly identify which is the reportable segment. There are 4 component, 1, 2, 3, 4. The external revenue is 80,000 in component number 1, internal is 0. In component number 2, nil 8,000, 10,000 nil, 8,000 nil. 98,000, 8,000. Okay. So in this case, the profits are given, the assets are given in this case, right? Identify which of the segments should be classified as a reportable segment in accordance with Ind AS 108, right? In accordance with Ind AS 108. So friends, in this case, first of all, you need to see total of revenue. What is my total of revenue? My total of revenue is 1,06,000. So 10% of the revenue means 10,600. So any component which cross 10,600 will be considered as a reportable segment from the revenue perspective. So from the revenue perspective, component number one is a is what? Component number one is a reportable segment from the revenue perspective. From the profit perspective, the total profit is 16,500. What is the 10%? 1650. So component number one is having a profit of more than 1650. Component number two is having a profit of more than 1650. Okay. 3 and 4 is not having. So from revenue perspective, component number one is a reportable segment. From profit perspective, 1 and 2 is a reportable segment. And from the asset perspective, total is 87,000. So any component which is having a asset of more than 8,700, which is component number 1 and 2, these are the reportable segment. So in total, component number 1 and 2 is the reportable segment. Component number 3 and 4 is not the reportable segment. So component 1 and 2 would be separately reportable since they meet all the reportable criteria. Component 3 and 4 do not meet any of the size criteria, and on the face of it, they are not separately reportable. However, if they had similar economic characteristics, then when aggregated, they would be over the 10% threshold for revenue, and so could be reported as a combined segment. तो इन दोनों को अगर सिमिलर कैरेक्टरिस्टिक्स है तो दोनों को एग्रीगेट किया जा सकता है, और एग्रीगेट करने के बाद अगर पहले आपको एग्रीगेट करना है, उसके बाद आपको थ्रेशोल्ड चेक करनी है. एग्रीगेट करने के बाद अगर वो रिपोर्टेबल बन जाता है तो हम उसको रिपोर्ट करेंगे. एंड द एक्सटर्नल रेवेन्यू ऑफ कंपोनेंट 1 इज 75% ऑफ टोटल रेवेन्यू. सो 75% की थ्रेशोल्ड भी अचीव हो गई, राइट. कमिंग टू द डिस्क्लोजर रिक्वायरमेंट. सो आपको डिस्क्लोजर कौन कौन से देने हैं, यहां पर मैं आपको बताता हूं, आपको रियल लाइफ एग्जांपल्स के साथ. रिलायंस इंडस्ट्रीज लिमिटेड की ये सेगमेंट इंफॉर्मेशन का डिस्क्लोजर है. यू हैव टू डिस्क्लोज सेगमेंट रेवेन्यू, segment results, other information. What is my segment assets, segment liabilities, capital expenditure, depreciation and other expenditure. Okay. So different segment: refining, petrochemical, oil and gas, organized retail, digital service, financial service. Others are all other operating segment. And unallocable, what is unallocable? For example, finance cost, which is not allocable, interest income, which is not allocable, exceptional item, which is not allocable, tax, you cannot calculate tax on the basis of verticals, right? So it is unallocable. So this total should be matched with the balance sheet or P&L, right? This total should be matched with the balance sheet and P&L, right? So first of all, we have given the segment wise information for segment revenue, your segment results, your external revenue, internal revenue. Internal revenue means when one segment is selling to other segment, right? So it is internal segment revenue. So segment revenue, segment results, segment assets, segment liabilities, capital expenditure, and this entire reconciliation is also given so that the profit reconciliation will be there. If the user wants to see whether this completeness is there, so completeness is there, right? So there is a secondary segment information also. So this is the primary segment information. What is the secondary segment information? What is the revenue within India? What is the revenue outside India? And non-current assets are also required to be disclosed within India and outside India, right? So this is the disclosure requirement. So guys, let me show you the segment reporting. If the company has a single reporting segment, right? If the company has a single reportable segment, then even in accounting standard, in case of single reportable segment, no disclosure was required. But in case of single reportable segment in Ind AS, there are some disclosures. The group primarily operates in the automotive segment. The automotive segment includes all activities relating to development, design, manufacture, assembly, and sale of vehicles, as well as sale of related parts and accessories. The board of directors of the group, which has been identified as being the CODM, evaluate the group performance, allocate resources based on the analysis of the various performance indicators of the group as a single unit. So there is a single reportable segment. Therefore, based on the guiding principle given in Ind AS 108, the group business activity fall within a single operating segment, namely automotive segment. Accordingly, the disclosure requirement of Ind AS 108 are not applicable. Segment asset, results, liabilities. But in case of a single operating segment, entity-wide disclosures are applicable. And what are the entity-wide disclosure? Entity has to disclose what is my revenue from operation, domestic as well as, so within India, outside India. I'm talking about this disclosure. So entity-wide disclosure for current year, last year, within India, outside India, domestic and outside India, right? And the entity is required to disclose the breakup of revenue, sale of products, sale of services, other operating revenue within India, outside India in total. And the entity is also required to disclose the non-current assets, non-current asset within India and outside India. Reliance is also given non-current asset within India, outside India, current year, last year. So these kind of disclosure are required to be given in case of a single operating segment, right? So I'm skipping this because I have already covered this part. Coming to the comparison between Ind AS and accounting standard. So of course, in Ind AS, the approach is a management approach, where the chief operating decision maker will tell you what could be your operating segment and what could be the reportable segment. But under AS 17, so there are identification of two set of segment. One is based on the product and services, and another is based on the geographical area, right? Business segment and geographical segment. Coming to the measurement. So Ind AS 108 very clearly says that whatever policy chief operating decision maker is using for assessing the performance of the segment, it has to use the same policy for the disclosure in the financial statement. But accounting standard 17 says that, you know, there is no concept of CODM, and whatever accounting policy in financial statement is there, only those accounting policies required to be disclosed for segment revenue, segment expense, segment result, segment asset, and segment liabilities, right? Aggregation criteria was not given in accounting standard, but Ind AS 108 says that you know, two or more operating segment can be aggregated if they are having a common characteristics, and they are similar in aspect like similar customer, regulatory environment, manufacturing process, distribution process, and nature of the goods and services. In accounting standard, if there is a single segment, no disclosure was required, but in 108, in case of single segment, entity wide disclosure are required, where revenue within India, outside India, breakup of revenue within India, outside India, and non-current asset within India, outside India is required to be disclosed. So that's all from my side, friends. So we have discussed three standards today: Ind AS 19 employee benefits, Ind AS 24 related party disclosures, and Ind AS 108 segment reporting, which is operating segments. Now the floor is open for the queries. So if you have any questions, I will be happy to discuss that. वैभव जी, अगर कोई क्वेश्चन है तो बताइए प्लीज. Yeah. If we have any questions, so I would be happy to answer those questions.
सर एक भी क्वेश्चन नहीं है आलोक सर.
राइट नाउ या अगर आपका अभी कोई क्वेश्चन नहीं है तो मेरा मोबाइल नंबर 99999154 है, आप मुझे व्हाट्सएप कर सकते हैं, तो आई विल बी हैप्पी टू आंसर योर क्वेरी. या आई एम डन. थैंक यू सो मच.
Sir, on behalf of Western India Regional Council, I want to thank CA Alok Garg, who gave his valuable time from his busy schedule to grace this seminar and sharing his opinion and expertise on the topic. AS 19 relating to employee benefits, AS 24 relating to related party transactions, and AS 108 relating to operating segments are all very important standards. CA Alok Garg very lucidly explained the finer aspects of the standards, and I'm quite sure that because of this, we all will be very confident this year in dealing with these standards. Thank you, sir.
Thank you so much. Thanks for the opportunity. Bye. Take care.